Morning, Abraham. Be up here in just a minute. I got to get ready for the show. I'm running a little late this morning. I'm fighting like home fires and stuff. Let the market open this morning. We're going to likely head down here and hit a bunch of demand down here, so don't do shit. We like to keep heading lower here.
1 minute to go now till we get the market on open imbalance. Ten seconds. Market on open imbalance. S&P 500 sell side 260 million. Nasdaq 100 buy side 1 million. Dow 30 sell side 56 million. And Mag 7 buy side 16 million. According to IIF, China, France, and Germany's largest contributors to global debt increase. Canada, UAE, and Turkey see debt declines. Emerging markets debt to GDP ratio hits a record high of 245% in the first quarter of 2025, according to IIF. Also from IIF, they say global debt rises by around $7.5 trillion to a record high over $324 trillion in the first quarter of 2025. Again, that's according to IIF Global Debt Monitors. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. EU Commission will propose in June halting Russian gas and LNG imports under long-term contracts by the end of 2027. It will also propose in June banning Russian gas and LNG imports under New Deal's existing spot contracts by the end of 2025. They'll also impose in June restrictions on new Russian nuclear fuel contracts co-signed by Euratom supply agency. And the Commission will propose in June to phase out all remaining Russian gas and energy imports by the end of 2027.
I'll be on here, guys, in just a minute here. I got some stuff I got to do really quick.
So, a reminder with the voting in German Parliament still going on at the moment. There's no English translation, but as we can see from the video from AP, it's still carrying on. But there is an English translated version on DW. We'll put that out if you're interested in watching it. We'll get the video on the feed. We have posted out the video on the Financial News feed for you to watch, in case you're interested. So EU Energy Commissioner Jorgensen, currently speaking at a press conference, says that Russia gas contract terminations are going to be force majeure.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So just a reminder for your calendars, while at 10 a.m. Eastern Time, Treasury Secretary Bessant is due to testify. The video of where he is speaking is on his name on the economic calendar on the left-hand side. If you click it, it'll open up. We'll see if we can try and find a YouTube video, but that's the video we have so far of him. And we do have a YouTube video. We'll put it on the feed for you. So he's to testify in Treasury oversight as economic turmoil mounts. So that video is now out on the feed. As said, Bessant due to testify on Treasury oversight as economic turmoil mounts at 10 a.m. Eastern Time. US stocks extend decline. Dow Jones down about 1%. And also with US stocks extending decline, S&P 500 now down about 1%. So seeing the S&P 500 falling 1% to session low, and the Nasdaq continuing to decline, now down about 1.3%.
It's not done going down here, guys.
To see here, EU measures to terminate gas contracts, but won't be sanctions.
We're going all the way down here, by the way.
As carrying on from EU Energy Commissioner Jorgensen speaking.
2 more minutes, so I gotta I gotta do something really quick in the background. I got a bunch of stuff going on in the background here. Hold on.
We're also less than 10 minutes away, about 8 minutes, till we get the Canadian IV PMI, seasonally adjusted, prior 51.3. So just a reminder with what Bessant had said yesterday to CNBC. He told CNBC that the Trump administration is very close to some deals. However, CNBC say that the White House has yet to announce any official agreements between the US and its trading partners. Just a bit of context before we get Bessant speaking at 10. 5 minutes until we're expected to hear from Bessant, and 5 minutes away from the Canadian IV PMI, prior 51.3. One minute to go down to we get the Canadian IV PMI data, and also expected to hear from Treasury Secretary Bessant.
See if I can find a video here for you guys.
Remember, the video for him is on the feed.
Play this right now. Oh, no.
Like migration.
This isn't it. I'm here, guys. I got a couple things I can't not do. Yeah, turn that on so you can at least see me that I'm here. Watch out for a squeeze here, a quick rip down and then squeeze. We've got Bessant likely coming out to announce some trade deals here. Is this real? What's going on here? This isn't real. That isn't the trade deal live. That link is garbage.
Some of my favorite businesses, as long-term channel viewers are aware, are fake technology.
Hold on here. I've got link tight here. That was a bad link. Or maybe they broke the link. I got a Forbes link here. Here we go. I got it up here.
So we have put out the updated Hill video now on the feed.
Dude, are they watching this show or what? Let's see what they got for a link. That link was bad. Maybe people just contacted them. Get rid of that. See what we got here. The Hill. I guess we'll try this link. Bring this one over here.
Oversight of the United States Department.
Here we go.
Members will have 5 legislative days within which to revise and extend their remarks and insert extraneous material into the record. I would note we have a hard stop today at 11:30. I now recognize myself for an opening statement. I'd like to thank Secretary Bessant for being here today and for his leadership in a steady hand over the last several months. We're living in an increasingly complex world with no shortage of issues. Whether it be taxes or tariffs, right-sizing regulation, or creating a regulatory framework for digital assets, the Department of Treasury's role is fundamental to the resolution. If we think about it, this is why the Department of Treasury was created. The department is central to maintaining a strong economy, creating jobs, and promoting economic growth, both here and abroad. It was created to bolster our national security and to assure our economic stability, and it continues to thwart terrorists and criminals and protect the financial system from illicit activity every day. Fulfilling these responsibilities is no easy task. As the department's fiscal year 2025 spending plan reveals, it takes significant resources. It starts with a strong workforce, the most updated technology, and the appropriate working conditions, including buildings that are sufficiently maintained. But this doesn't happen in a vacuum. It also takes cooperation, transparency, and accountability. As this committee looks to fund the department's future operations, we need to understand the priorities and how the department is deploying resources across its divisions and bureaus, and why. There are definitely efficiencies to be identified, but changes need to be thoughtful and deliberate to ensure the department's mission is still accomplished. We need to ensure our financial system, the economy, and leadership around the world is safe, secure, and thriving. Secretary Bessant, there are and will be challenging times ahead, but I believe you are the right person at the right time to overcome those challenges. I look forward to working with you, and I now recognize the ranking member for his opening statement.
Thank you very much, Mr. Chairman, and welcome, Mr. Secretary. This is our first substantive hearing dealing with the devastating actions that the Trump administration has taken in the first 3 months of 2025, actions planned and predicted by Project 2025. I look forward to having more such hearings with other agencies under our jurisdiction, especially the principles of Doge, OMB, GSA, and OPM, which are having such profoundly negative impact on our country. What we've seen in the first 100 days of this administration is unprecedented, and so the polls tell us, disturbing to the American people. An irresponsible, incoherent tariff policy has plunged the Americans and global economies into chaos. These past 3 months, the American economy shrank for the first time since the final days of the pandemic. The stock market fell more in the first 100 days of the Trump administration than in the first 100 days of any presidency in the past half century. Consumer confidence is at its lowest since May of 2020, the height of COVID-19. That uncertainty has also rattled the bond market, with investors dangerously starting to doubt the full faith and credit of the United States. Most importantly, Americans are hurting.
This guy's a Democrat, by the way.
Retirees watch their life savings losing value.
So keep that in mind when this guy's talking.
As they struggle to navigate ever-changing tariffs. Our economy is in chaos, and so I think is our government. Donald Trump, Russell Vought, and Elon Musk are orchestrating an illegal purge of our federal employees. They clearly had a lot of ideas on how to remove these people and dismantle these programs as quickly as possible. Sadly, they had no clue, in my view, as to the devastating consequences of their actions on our country, our government, our allies, and the professionals we rely on to serve the American people. I am particularly concerned about the Internal Revenue Service, which has been severely understaffed and underfunded for decades. So far, the Trump administration has forced the IRS to cut as many as 11,443 employees, or over 11% of its staff. That includes 6,700 workers who were fired at the height of this most recent tax session. Now the administration is planning to reduce the IRS workforce, I understand, by another 40,000 jobs, or 40%. That includes up to half of the IRS enforcement staff. Additionally, Trump's 2026 budget cuts funding for the IRS by 20%. These actions at IRS, in my view, and every other government office, have bludgeoned morale, destroyed efficiency, and increased waste. Cutting back on IRS enforcement makes it easier for the wealthiest individuals and corporations to cheat on their taxes and get out of paying what they owe. That, of course, increases what others pay and explodes the deficit. As the President and Congressional Republicans...
The deficit is actually good, believe it or not, for bull markets.
Tax code, they are also pursuing massive tax cuts for the wealthiest among us. Furthermore, Doge operatives are rifling through IRS databases that contain Americans' sensitive information, including their financial history, Social Security numbers, immigration status, and more. The story is the same across the federal government. Americans are reeling from this uncertainty in their economy and in their government. They need answers. More than that, they need an adult in the room. That is the role, I hope, the Treasury Department plays, and Mr. Secretary, in particular, yourself. The economy and markets do not lie. We all depend on the Treasury Secretary to communicate clearly and transparently to the President, the Congress, the American people, and indeed the world. I've mentioned tariffs and the IRS, but I'm also eager to hear, Mr. Secretary, from you about our economic approach to the Russian-Ukraine war, especially in light of last week's mineral deal and recent questions about our sanctions regime on Russia. Former Secretary Mnuchin, whom I believe you know, sir, and I disagreed on some things, but we still found ways to work in a bipartisan fashion to inspire confidence in the economy. Mr. Secretary, I look forward to doing the same with you. Thank you, Mr. Chairman.
Thank you, Mr. Hoyer. Today we welcome the testimony of the Honorable Scott Bessant, Secretary of the United States Department of Treasury. Secretary, without objection, your written testimony will be entered into the record. With that in mind, we ask you to please summarize your opening statement in 5 minutes.
Good. Thank you, Mr. Chairman, the Congressman Hoyer, Ranking Member, the Chairman Joyce, Ranking Member Hoyer, and members of the subcommittee. I'm grateful to join you today. Treasury is eager to work with members of Congress to fund key priorities to strengthen our economy, and we look forward to coordinating with you on the President's budget as soon as it is released. Today, I wish to highlight the Department's efforts to boost U.S. economic growth improve government efficiency, and target illicit actors that threaten our national security. The core components of the Trump economic agenda are trade, tax cuts, and deregulation. These are not standalone policies. They are interlocking parts of an engine designed to drive economic growth and domestic manufacturing. Tax cuts and cost savings from deregulation raise real incomes for families and businesses. Tariffs create an incentive for reshoring jobs and fair trade. And deregulation complements tariffs by making it easier to invest in energy and manufacturing projects. Already, this agenda is bearing fruit. In the first 100 days of the new administration, 464,000 new jobs were added to the economy. In April alone, over 177,000 American jobs were added, more than 40,000 more than economists predicted. All the while, unemployment remains low while real hourly wages continue to grow. As important as spurring job growth is wrangling inflation. And in this endeavor, the administration continues to make tangible progress. The CPI for energy goods declined in March, as did the price index for core goods. And the CPI for all items declined for the first time since the COVID pandemic. While the cost of goods is decreasing, so are energy prices. Complementary to our efforts to grow American prosperity, we are focused on improving efficiency across all levels of government, but especially the IRS. We just concluded a successful tax filing season, but the IRS still needs significant reforms to deliver efficient and cost-friendly results for the American people. In this endeavor, we have successfully cut $2 billion from the IRS IT budget without any operational disruptions. We achieved these cost savings by eliminating, renegotiating, and de-scoping wasteful IT and professional services contracts and addressing long-standing inefficiencies, such as auto-renewed licenses unused for years. This intervention alone will save taxpayers hundreds of millions of dollars each year. We are also taking steps at the IRS to reduce administrative costs with a particular focus on paper processing, which has been a long-standing bipartisan goal. Last year, the IRS spent approximately $450 million on paper processing, with nearly 6,500 full-time staff dedicated to the task. Through policy changes and automation, Treasury aims to reduce this expense to under $20 million by the end of President Trump's second term. In addition to making government more efficient, Treasury is committed to working alongside the White House to make America safe again. To that end, we have launched a maximum pressure campaign against violent cartels and terrorist networks. We have assessed tens of millions of dollars in civil penalties against organizations facilitating money laundering along the southern border, and by leveraging sanctions, we are choking off the financial lifelines of terrorists, criminals, and hackers from Mexico and Guatemala to China and Iran. In the first 100 days of the new administration, we have set the table for a robust economy that allows Main Street to grow. With Congress and the White House working hand in hand, we expect to see even more positive results over the next few months. Key to expanding economic opportunity for all Americans is making the Trump tax cuts permanent. We look forward to working closely with the members of this committee to pass this bill into law. Together, we can build a stronger, safer, and more prosperous America. Thank you.
Thank you, Mr. Secretary. I now recognize myself for the first questions. Secretary, let's fast forward a year. Where do you see the U.S. with respect to tariffs and the overarching strategy? Do you anticipate all trade deals being bilateral, or could there be multi-country trade pacts of which groups of countries agree to a tariff schedule?
Mr. Chairman, this will be path dependent on our trade partners. As I've said before, there are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. So I expect
That's counter to what Trump has said.
In the tariffs that we are being charged, as well as non-tariff barriers, currency manipulation, and the subsidies of both labor and capital investment. So that is proceeding very well. Many of our trading partners have approached us with very good offers, and we are in the process of renegotiating those. With the economy, I would say that this is a three-legged stool: trade, tax, and deregulation. Trade was first. The House, according to Speaker Johnson, expects to move their portion of the bill over to the Senate on or about the Memorial Day, so we're looking forward to that.
So seeing a
then
little bit of movement towards the
deregulation
upside on the euro,
necessarily
the back of that.
takes longer to affect the economy.
Bessant
but I
says
would
many
expect
trading
in the
partners
third
have
and fourth
approached
quarters,
the US.
Voice
we would
news
see,
disconnected.
substantial benefits from deregulation that by this time last year could be at full force.
We've seen a few numbers discussed in terms of how many countries with whom you have started tariff negotiations. What is the actual number, and what is the status of those negotiations? How many deals do you anticipate by the end of the year, in the first quarter of 2026 or the second quarter? And what are the biggest challenges you see to negotiating tariffs and getting trade deals done?
Again, sir, approximately 97 or 98% of our trade deficit is with 15 countries. 18% of the countries are our major trading partners. And I would be surprised that if we don't have more than 80 or 90% of those wrapped up by the end of the year. And that may be much sooner. That I would think that perhaps as early as this week, we will be announcing trade deals with some of our largest trading partners. They have come to us with very good offers. And what I will tell you is that in negotiating with some of them, they may not like the tariff wall that President Trump has put up, but they have them. So if tariffs are so bad, why do they like them? And then more insidious, we can see that from a practical matter and from academic research, are the non-tariff barriers. If you were to look prior to the escalation, I believe Chinese tariffs are only 5%. So clearly there's something else going on.
That's false.
They're accumulating these gigantic surpluses.
The president released his skinny budget for the year, fiscal year 2026 on Friday. Budget calls for approximately $2.5 billion cut to the IRS.
The 5% figure is false.
IRS over the last several years, somewhere in
The points about tariffs, though, is true.
The cut from the IRS. What would you talk about your vision for the IRS and why streamlining operations will benefit taxpayers and not hurt them?
Well,
SPY with a new high, looking for a back test to go higher.
30 years behind on an IT modernization project where perhaps up to $50 billion of taxpayer money has been wasted. We are right-sizing that. So the substantial decrease in the IRS budget is largely in IT. We have had a large number of employees take the option for early retirement or for retirement. And again, let's look at the numbers. We are just taking the IRS back to where it was before the IRA bill substantially bloated the personnel and the infrastructure.
Thank you. And now recognize Ranking Member Hoyer for any questions he may have.
Mr. Chairman, let me ask you a broader question, Mr. Secretary, at the outset. The President has been talking about recession and the acceptance of a recession in the short term. Do you believe we're in a recession now?
Congressman, I believe in data, and there is nothing in the data that shows that we are in a recession. As a matter of fact, the jobs report has surprised to the upside.
The job report, of course, less than the...
So China tariffs were 20.8% prior to 2025.
2024. But the GDP went down this first quarter of the Trump administration. if we have a negative
Who's squeezing higher now, trading 560?
definition of a recession, would you agree that we are in that recession of which the president speaks?
Yeah, Congressman, these economic numbers are noisy and subject to substantial revision. So I, having looked at a detailed analysis, would believe that the first quarter GDP would be revised upward. And I would also, with regards to your remark about where we were last year, we were spending 6.7%. We had a 6.7% fiscal deficit, the largest we've ever had during peacetime or non-recessionary times. So the easy thing would be to keep spending, to keep the economy running on an unsustainable path of government spending.
Let me remark, because you mentioned this, I think in our meeting, we had a spending problem, not a revenue problem. I want to talk about the revenue problem. Let me suggest to you, my view is it's neither a revenue nor a spending problem, it's a pay-for problem. If we would pay for what we buy, whether it's defense or non-defense, we wouldn't increase the deficit. So I think looking at, I'm a big proponent of paying as you go. Unfortunately, we haven't pursued that on either side of the aisle, maybe for different objectives. Let me go to IRS. You probably know these figures, and these are somewhat old at this point in time. But what they reflect, as you will see, is a substantial decrease in the resources of the IRS, particularly in enforcement. As the blue representing an increase in filings, the orange representing the nominal, and the dotted line, the net actual value of the funding for IRS, particularly enforcement. The budget proposes substantial cuts. Have you or anybody done a analysis of the ramifications of those cuts, both in the short term and in the long term, in terms of your ability to collect revenue? Let me paraphrase, not paraphrase, but give a, in your discussions, you said you were not going to sabotage, that we had in my office, sabotage collections. Are you confident, in light of the fact that any IT, and I agree with you, we've wasted a lot of money on IT, that any IT will be accomplished within the next 36 to 48 months, and therefore justify a reduction in...
Watch out for a pullback here as we hit the half-an-hour trigger.
Let me work backwards there.
And also note that we have a gap higher to close.
Confident that we will make substantial progress in the IT and right-size the payment system, the collections system. As I've repeatedly said, my priorities are collections, privacy, and customer service. And again, the substantial increase in the enforcement group, there is nothing that shows historically that by bringing in unseasoned collections agents that results in more collections or high-end collections. It would be like sending in a junior high school student to try to do a college-level class. That becoming a high-end IRS collections agent.
Pullback should come down to 560 flat.
So I believe through smarter IT, through this AI boom, that we can use that to...
And watch out for that flush. It could go all the way back down here to 558.50.
Collections would continue to be very robust as they were this year.
Chair now recognizes the gentleman from Arkansas, Mr. Womack, for any questions he has.
Thank you, Mr. Chairman. And thank you, Mr. Secretary, for your service and for being here today in front of my colleagues. I'm going to ask a question that I'm sure you've never been asked before, but I'll give it a try here. When is X date?
Congressman, we are, as I said earlier, we still take in a large amount of the paper returns. So every Friday, I get a summary, and if you can believe it, as you know, tax day was April 15th. We are still tallying that. So that we don't have, we will share with Congress when we believe we are approximating that date. So that will be forthcoming. But I will tell you, just as an outfielder running for a fly ball, we are on the warning track. And when you're on the warning track, it means the wall's not far away.
So it's not today.
So X date is when we can no longer pay our debt.
And
Same question that Jerome gets.
the United States government will never default.
Ding.
We will raise the debt ceiling, and Treasury,
It's a bullshit argument.
any gimmicks,
It's for politics.
will make sure that the debt ceiling is raised.
You have already answered a couple of questions about the president's budget, and I'm going to ask maybe a little differently. The president's budget request for fiscal 26 looks very different from President Biden's budget just last year, and I have been a longtime proponent of getting our fiscal house in order, and I applaud the president's attempt to get our fiscal house in order. During my tenure as chairman of the House Budget Committee many years ago, I co-chaired the Joint Select Committee on Budget and Appropriations Process Reform, and many of our recommendations are included in Trump's request. It's no secret we're heading toward a big and needed change within the federal bureaucracy. That said,
So we've done this here.
request for the Treasury is $11.5 billion
We've done this here.
compared to FY25 enacted at 14.2.
We're now on this trade here from up here all the way down.
You've already mentioned that we have savings achieved in contracts regarding IT services and this sort of thing, and we've saved the American public a lot. But you've also said that IT remains one of our biggest challenges, particularly within the IRS. So how is it that you're going to operate with a smaller budget that still serves the needs of the American people?
Sir, part of that has been bringing people back to the office. So on March 10th, we reinstituted a work from your office program. And again, I think it's going to be efficiency. We have asked for more money for many of the priorities. The Treasury Foreign Intelligence Network and the Office of Foreign Asset Control, OFAC, so we will be keeping the American people safer. And again, we think through efficiency gains, the federal government historically does not have productivity increases. And as I've continually pointed out, Doge is the Office of Government Efficiency, not the Office of Government Extinction or Eradication. So I think that it is not a big leap to do much more with less.
Are there $2.5 billion worth of efficiencies?
Well, again, just two of it is in the IT department. And if you were to look, Treasury processes about 1.5 billion payments per year, which is like a mid-sized U.S. regional bank. We have had many of these banks come in and talk to us about their payment programs, and their departments are 1/10 the size and 1/10 the budget. So allowing for the redundancies that we would need as a government agency, then we think that we do need to.
Remember, this ends at 11:30.
But there are substantial savings to be had.
I want to ask one more quick question, because I know we're probably not going to have a second round. You have been a proponent for better financial literacy in this country, and your background is, is evidence of that. Quickly, can we do a better job in this country of educating young people on matters of financial literacy?
Sir, any increase that we do would be a better job. We just hosted Financial Literacy Month at the Treasury. I only had 2 months to get ready for it. I can tell you that every April we're going to do more and more, but the key to financial independence is financial literacy, making good choices, and not, I don't think it comes from more regulation. I think it comes from more financial education.
Thank you very much.
The chair now recognizes the gentleman from Wisconsin, Mr. Pocan, for 5 minutes.
Great. Thank you, Mr. Chairman. And thank you, Mr. Secretary, for being with us. My main concern is, I think, what people are looking at the economy. The first 100 days, lowest stock market since Richard Nixon, not usually a measure people are shooting for. On tariffs, the fact that last year we had an effective rate of about 2.5%. I think the Yale Budget Lab, and I believe you went to Yale, has said that effective rate is closer to 28%, the highest since 1901. I know that some of that's changed because the tariffs are on again, off again, some on again, some off again. Somewhat chaotic, I believe, as your term is what, Crazy Ivan style. I compare them to how a monkey throws dung. You're not exactly sure where they're going to land. And that's the concern I have as a small business owner, and I know Ms. Luzenkamp-Perez is as well. I've got small businesses really worried. You made a comment about while cargo volumes have dropped 60%, you see this as a temporary detox. But for a small business that's getting by day to day, that's much bigger. You talked about Main Street. We want to finally focus on Main Street, not Wall Street. I think you were at a global investor conference in Beverly Hills yesterday. That's the cocktail party where you mentioned the Crazy Ivan theory. And before that, you were at a JP Morgan Chase World Bank private investor summit. All those things are not Main Street, right? Main Street is an auto body repair, a specialty printer. So my concern is on the tariffs. Who pays tariffs, Mr. Secretary?
By the way, this shit went off the rails already like 10 minutes ago.
Who pays tariffs?
Sorry, well.
Who pays tariffs?
Sorry,
Mr. Secretary, please.
Excuse me.
The question is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question.
Well,
He wants to answer other questions.
well, Congressman, if the exporters, dislike tariffs so much, why wouldn't they, if, I think what you're trying to get me to say.
Did you remember the
is
question? I'm not sure you did. Who pays tariffs?
That it's a very complicated question.
Reclaiming my time. People pay tariffs, right? Reclaiming my time, Mr. Secretary. Reclaiming my time, Mr. Secretary. Reclaiming my time. You clearly aren't going to answer. I'm not going to waste my time having you go, Mr. Secretary, reclaiming, Mr. Chairman, I asked reclaiming my time.
Tariffs.
Mr. Chairman, and I asked to reclaim my time. Did I not? No, I said reclaiming my time because he's clearly not answering it. So, yeah, so as a small business owner, and unfortunately I'd like that time back since you failed to recognize me for 30 seconds. So I just recently from one of my suppliers got the tariff surcharge on things. And in addition to the tariff surcharge, guess what else got raised? American-made walnut plaques. That has nothing to do with tariffs, but companies take advantage and do that. So right now, we are getting screwed right and left because of the indiscriminate use of tariffs. That's the reality for Main Street. And you go off to Beverly Hills for private investor conferences and talk about Crazy Ivan theories. Answer that. What is the Crazy Ivan theory of tariffs?
This guy's mixing up greedflation with...
First of all, sir, I've had meetings with more than small lenders. So I want to clarify that.
We're shifting from greedflation now to where
of which the
tariffs around the world end up
your words, correct? Didn't you use Crazy Ivan at the
be getting more
and
answer the question, Mr. Chairman.
Inflation from other companies, even if they're not directly affected. So greedflation took place in November through March.
Thank you. I'm going to reclaim my time again. So for a small business, we don't have that luxury, right?
But this inflation is not greed inflation like this guy is saying.
You can't get goods and people are stocking up for Christmas goods. Crazy Ivan is great for, please don't take this offense, really rich people like you. But for people like me, it's not, right? That's what makes small businesses fail. That's what makes people lose their jobs. That's what makes the stock market tank.
So I'll ask one more time, who pays tariffs?
Sir, the history would show that it is a complicated mix of who pays the tariffs over various times.
That's right.
So that's
And
exactly.
eventually companies
Historians are
and
very
the
educated.
origin
They're very
company winds
justified.
up absorbing at some point. It's a one-time hit.
Pays tariffs because you won't answer that, and you say it's a complicated issue. It's not complicated. Consumers
Yes, it is.
pay Trump's tariff tax. That's the reality. And I'll yield back, Mr. Chairman, but I do think next time.
That's political bullshit grandstanding.
Having my time yield back.
Chair now recognizes.
We'll talk about this in a minute.
Iowa, Ms. Henson.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Thank you so much for taking the time to come and answer our questions. I appreciate what the Trump administration is doing to try to level the playing field for American consumers and restore our economy to where.
We're talking about greedflation.
Work that you were doing to make that happen, Mr. Secretary. And I certainly, as an appropriator, recognize the importance of making sure that every tax dollar is spent appropriately, and I appreciate your opening comments as such. So with that, the GAO estimates the federal government loses between $233 and $521 billion annually to fraud. Those are alarming numbers, hard-earned tax dollars just wasted. President Trump has certainly acknowledged the absurdity of this level of waste, and he signed Executive Order 14249 to protect America's bank account against waste, fraud, and abuse. And I was proud to support this effort by introducing a piece of legislation to codify that, the Protecting American Taxpayers from Wasteful Spending Act. One of the provisions of this EO is directed at your department, the Department of Treasury, to establish pre-certification and pre-award procedures across the federal.
Just a note here that we still have not filled this downside move, even though we filled this one.
Of what you're seeing and why
We're either going to fill it now or up here, but we are going to fill it. So just note that.
They weren't in place. And what we are seeing is that there was a very complacent upper level of management in many departments across the entire government. And what I can say at Treasury, that of the 1.5 billion payments we send out every year, they're required to have something called a TAS, a Treasury account symbol. We discovered that more than one third of those payments did not have a TAS number. So as the Appropriations Committee, you should be shocked by that, because how can a payment be tracked back to an appropriation? Only through the TAS number. So there was no accountability. So that is why the 450 organizations that sit above Treasury, where Treasury acts as the paymaster, are unable to pass an audit. So we have the crackdown on that. Every payment now requires a TAS number. Very simple, and I will tell you that the mid-level employees who I have had come into Treasury to talk to me about that feel liberated. That they have, they tell me, I've been here 20 years. I've always wanted to do this. I've been here 14 years, and they feel as though they now have agency and are making a difference towards saving the American taxpayer money.
So this is not only a complacency issue that you've fixed, but it's a morale issue for these employees who are helping to make the department much more efficient for taxpayers.
They're very energized by their participation.
Yeah, it's certainly unbelievable when you think about that this was not in place, and certainly it's we've got lots of examples from the previous administration of some of those catastrophic failures. Who would you say is benefiting from those improper payments, and how could a government agency really justify standing idly by while those errors were seeping into our system and making our government less efficient?
I can't speak to who was benefiting, but I can just speak to the attitude that has been shaken up, that this is okay, this is not okay, and this is taxpayer money, and we are charged with protecting it.
What other plans are in place to help implement that executive order? You've talked about the Treasury account symbol. Are there other things in that executive order that you are executing on today?
Well, again, the president, as you mentioned, has passed. We are trying to go more paperless with the checks, with the very important checks that the citizens across the U.S. receive, whether it's Social Security, veterans benefits, tax refunds. There is a substantial number.
Notice that the verbiage has changed away from fraud
executive order to try to make that more electronic. That will protect the integrity of those payments as well as cut down on cost.
Have you been able to claw back any improper payments for the taxpayer, reclaim those dollars?
Yes, we've clawed back tens of millions of dollars.
Tens of millions. Well, look forward to continuing to work with
All monies clawed back were from prior agreements.
executive order. Appreciate the work you're doing at Treasury.
No fraud money recovered. Zero.
Ms. Hinson, Chair now recognizes the lady.
So there's a lot of, almost everything I've heard here from the beginning is
Thank you, Secretary Bessant, for being here.
either politically based or it's not based in reality or it's not based in
And
economics.
I know that people who are turning wrenches, who are filing an earned income tax credit or tax return, they're about 4 times more likely to be audited. And I'm wondering if you could talk to me about what the plan is for ensuring that regardless of what income strata you're in, your probability of being audited is equitable.
Well, Congresswoman, I think that was one of the problems with increasing the enforcement. There was nothing to say that there would have been more enforcement at any distributional level. So that what you were saying is that those receiving the earned income tax credit are more likely to be audited. That would have just meant more auditing. There was also a proposal to track small payments, $600 on Venmo and things like that, which has been pushed back also.
But what is the forward program to ensure that there is an equitable? I have some quarrels with what you said, but what is the plan, the implementation plan to ensure moving forward we are getting towards a more equitable enforcement rate?
Look, we are reviewing the processes for who is audited at the IRS. There's been a great deal of politicization of that. So we are trying to stop that. And we are also going to look at the distribution of who is audited and why they are audited.
And ensure that rich people are not audited more.
Hearing more about how that is being implemented and how we can help you with that. So I think you and I agree that the current trading system has failed working people who are turning wrenches, driving trucks, changing diapers. Could you expand on how the proposed tariffs would ensure that there is upward pressure on wages?
Well, I think that there are many parts to that, but the key to upward pressure on wages is more job opportunities. And what we have seen since what the so-called China shock after China entered the WTO was a large decrease in manufacturing jobs. And studies have shown that workers in manufacturing jobs have more potential for large-scale wage increases than service workers do. So moving more workers from service work to manufacturing should do that. And the administration is also trying to bring down the cost for working families.
I agree, right? If you are trying to earn a living as a barber, you have to move to a city to earn a high wage. But if you're in a rural community where there's a factory job, you can own land, you can own your home. And I think one of your points about financial literacy is ensuring that we do have economic self-determination. You can buy the pair of boots that will last 5 years and not be in this pace. But there's a lot of work to do here, building real wealth and not the nominal kind of, I'm not really here to be a defender of the stock market. Most of the people I know don't trade stocks in my community. It's a question of being able to own land, having that capital access to start your own business, and frankly, some of the antitrust work to ensure there's a level playing field for small businesses like mine. I'm hearing from constituents who have questions about their tax returns and are having trouble getting a real person on the line to speak to. What can we do? What is your plan for decreasing wait times, for having somebody be able to actually talk to a human being when they call the IRS?
Well, again, this goes back to my 3 priorities: collection, privacy, and customer service. So we are moving money into customer service at the IRS. And it's almost imaginable that the phone banks were had the same number of operators 24/7, 365 days a year. So if one of your constituents called on Christmas Eve, they'd probably get through because there were so many idle phones. If they called on April 14th, there was no surge to help them. So, as President Trump has repeatedly said, this is a common sense administration, so we're going to have common sense for the IRS. Playoff season is for the first, from January 15th to April 15th, game days April 15th, and we're going to make sure that it's better staffed then.
Thank you. I yield back.
Thank you very much. Chair now recognizes the gentleman from Texas, Mr. Cloud, for his 5 minutes of questions.
Thank you, Chairman, and thank you, Mr. Secretary, for being here. I think it was Albert Einstein who said that you can't solve problems with the same kind of thinking you used when you created them. And that's one of the things I certainly appreciate about you and the Trump administration and what you're bringing to the table. For a long time, we've seen the managed decline of America, and while many who run for positions that we hold will campaign on the need to do something, what we've seen is too often, and even because some of the politicking we've seen today, for the sake of politics, we've not been able to do the big, hard things that we need to change course and get us out of the $36 trillion debt pathway and growing pathway that we're on, leading to that wall that you talked about. The American people have watched this all play out, realizing that their nation's been in decline and seeing what they thought was kind of the promise that if we put the experts in charge, they would run the government, we would have a regulatory pattern that worked, the wealth gap would close, America would be strong, and that has not happened. What did the experts get wrong that you're correcting?
Well, sir, under President Trump's first administration, the wealth gap did close. That the bottom 50% of households by net worth saw their net worth increase substantially more than the top 10%. And we are aiming to do that again. That under President Trump's first term, hourly workers' wage gains were higher than supervisory workers. And look, what people got wrong was the shock. And there was this terrible policy of, it was essentially compensate the losers. And I do not think that the American workers are losers. They were simply cast aside as the necessary collateral damage in this unfettered free trade. And the free trade is not always fair trade, and we can see that from the large surpluses that these countries are accumulating on the other side. So we are aiming for fair trade to bring back high-paying precision manufacturing jobs to the U.S., and we are doing that. We're using tariffs, but we were also using the substantial deregulation, energy dominance, so we want to continue to make the U.S. an even more attractive location for manufacturing.
It's interesting you talk about manufacturing. I think it was in 2008, the intelligence community put out a report. I talk about it a lot because they said the greatest transition of wealth, power, and influence is happening right now. And this was some years ago. They said we expect it to continue, and it was going from the Western countries to the Eastern countries. And they said it was happening because we were sending manufacturing overseas and we were sending oil and gas revenues overseas. And yet they said it was like an unsolvable solution, yet we have the Trump administration who's coming in and solving what seems to be not an easy solution, but a very clear solution in bringing manufacturing back and bringing oil and gas back. And appreciate it. I wanted to ask you, because there was a comment about the bond markets, and certainly that's really is a concern. We need to make sure that they stay strong and that the dollar stays strong. Are the bond markets more affected by the tariffs and the concern we see in them now? Are they more affected by the tariffs or out of control debt and the fact that Congress can't seem to get our fiscal house in order?
Well, I will tell you that the large stock of government debt is why I'm sitting here now, as opposed to back in the private sector. I became so alarmed by what was going on under the previous administration, this deficit that we had, highest ever, that when we weren't at war or weren't in a recession, and it's unsustainable. And I thought it was deeply cynical, And if we'd done it, if we'd continued it, then we would have gone into a malaise where we couldn't grow ourselves out. We would have probably been forced into looking more like a European-style economy, very high government spending, lack of innovation, and lack of mobility.
And that would matter for us here at home, but certainly even for the world, because we've kind of been the innovation engine of the world.
Yes, sir. But what we've created in the U.S. is this barbell economy.
I wrote down the notes here to go over this later. Wait until they're done. I'll go over the tariffs, who pays them, and greedflation, all that kind of stuff, because they're mixing up a lot of shit here.
In the world. On the other side, we are a natural resources economy led by energy, which the previous administration, they stopped permitting for LNG facilities. So
there's a lot of horse shit from everybody here.
Is what we were missing.
Bessant's telling some truths, some lies, but then he's telling some truths to evade.
Thank you. The chair now recognizes the gentleman from Maryland, Mr. Ivey, for 5 minutes of question.
I appreciate you being here today, Mr. Secretary. I want to ask you a few questions about Doge and the role it's playing at Treasury. You came into office, I guess you were sworn in on the 27th, was it? You were confirmed by the Senate on the 27th? Is that about right?
28th.
28th? Okay. And then you started working at Treasury immediately.
Note that we are coming into the hourly trigger. There should be some resistance here.
Well, with respect to the payment systems?
Two individuals from Doge who were actually Treasury employees were on site.
Okay. And I believe you were approached by the highest ranking career official at Treasury, David Lebrick. Am I pronouncing his name correctly?
I believe it's Lebrick.
Lebrick, okay. What was the nature of that conversation? I assume this was about the Doge issue, but tell me briefly what that conversation was about.
Well, that conversation was about a discussion of the payment system. And when I go back to what I didn't know, I think I walked in the office around 3 p.m., and I think he and I were having a conversation at 4:30, and
I got to ask for the short version.
Oh, no.
Okay.
But I will tell you that when we were talking about the tasks, that it was people like this individual who were hitting send on the payments. So, I've come to find out that he's part of the
Okay, I
problem.
apologize. I'll have to get that later from you.
Yep.
Feel free to send in substance of the discussion in a letter. But I guess what I was going to ask was, you just mentioned there were two people who were working with respect to Doge at the time.
Yes, sir.
And Mark Elez was one of those?
I'm not sure.
Not sure?
Yeah.
You're not familiar with that name?
I don't recall that name. I interviewed Tom Krause and personally recommended him to work at Treasury.
Okay.
Definitely not the guy that
Elez, had worked at Mr. Musk's SpaceX company. And
that guy, I don't know who he is.
issued a story, I think around February 7th, that talked about
1 minute's flattening right now.
that Mr. Elez had made in the prior year. One was, you could not pay me to marry outside my ethnicity. Another was that he wanted to normalize Indian hate. A third was, just for the record, I was racist before it was cool. And another was, I just want a eugenic immigration policy. Is that too much to ask? This man resigned shortly after that article was published, but you don't recall him being there?
Congressman, I did not recall that individual's name, but that individual was terminated.
Oh, I know who he is now.
Well, I appreciate that. Although it appears that he then later turned up that he was rehired, I guess.
Oh.
Treasury, sir.
Okay, but he was continuing to do work for Doge.
Please. I thought he was deleted.
And three other departments?
I
You have no idea.
I didn't follow his career.
Okay. Wait, you didn't catch J.D. Vance saying that he didn't think he should be terminated? Did you miss that too?
I don't recall.
Yeah, I don't recall any of this.
Saying that he should have a second chance.
I don't recall that.
Shocked Pikachu.
And do you recall Mr. Musk saying he should be given a second chance?
I don't know if they'll bring up the other stuff that came out yesterday, but
I guess the main question too here is
there's a whole bunch of other shit now with like Russia and shit and these Doge guys.
before you brought on these two people and gave them access to the payment system, which is $6 trillion.
Well, sir, they did not have access to the payment system.
Some documentation yesterday coming out that Doge was infiltrated by Russia.
They only had read-only abilities. And it was they were there for tech support to look at the payment system.
Tech support.
The ERP system.
They were answering the phones.
Is this
I remember who he is now. He's nobody.
Even in that capacity, if you'd known that he'd made these statements prior to him becoming part of that team?
Congressman, that I think it's very difficult to monitor everyone's social media.
That's not what I asked. If you
fired.
knew that he had made these statements, would you have brought him on in the capacity that he had at the Department of Treasury?
I think the Office of Personnel Management would have flagged that.
Would you have brought him on?
Sir, again, I'm not going to speculate.
The chair now recognizes the gentleman from New York.
You should have said no.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Good to be with you this morning, sir.
I'll chalk that up to Bessant not knowing how to politic.
As head of Treasury, you advise the president on taxes and trade, sir?
Although I'll take that as a good answer, I won't speculate anything.
Among many
I'll
others.
be fucked either way.
And Mr. Secretary, in your estimation, how did President Trump's 2017 signature tax bill affect American job creation, employment, and wage growth?
Mr. Vice Chair, it provided a substantial non-inflationary impetus to the economy, which resulted in real wage gains on a non-inflationary basis for the American people and a robust economy.
I would add, I'm with you 100%. I'd add some data into there. 4.9 million jobs between the passage of the tax bill and the COVID pandemic. Employment rates dropped from the 4s to the 3s, and we had a lot of wage growth, especially within the middle class. And that sets me up for my next question. Congress now is considering extending those tax cuts, which expire at the end of this calendar year. Would that be a good idea, Mr. Secretary?
Congressman, what Congress is considering is making them permanent, which is a better idea.
We're considering a lot on that tax bill. We're also considering SALT, which I think is an awesome idea as well. But nevertheless, on the greater bill, public polling suggests that you're right, and that 8 of 10 Americans agree that extending those tax cuts are a good idea, recognizing that they help grow wages. They
note that we only have a half hour left, regardless of where this goes.
But I want to use the remainder of my time to talk about trade policy, Mr. Secretary. Is it true that America's trade deficit is about $1.2 trillion?
Approximately, yes, sir.
And with China, Mr. Secretary, about $300 billion?
Yes, and I believe it may have increased slightly.
Yeah. And Mr. Secretary, what impact is China's exploitation of child labor and near slave-like labor, what impact does that have on the trade deficit?
Well, sir, that it creates an unlevel, aside from the values problem that Americans do not believe in this behavior, that it creates an unfair trading advantage. And we can see that from the size of the deficit, but more importantly, from the size of the large surpluses they're accumulating.
And Mr. Secretary, what impact does China's notorious theft of America's intellectual property have on our $300 billion trade deficit?
Well, I think that is a problem for not just the U.S., but for every other country. And to the extent that they are able to leapfrog, whether it's with technology, whether it's with products, then that creates a huge advantage that has given them, it's back to one of the cornerstones of the problem of trade, that if you don't have to spend money on R&D, then you can spend it on manufacturing, cheap manufacturing.
And Mr. Secretary, are tariffs a tool to reduce America's trade deficit, specifically with China?
Yes, sir.
And are they also a tool to protect American jobs, Mr. Secretary?
100%.
And Mr. Secretary, you could probably tell by how far I sit in the dais, I'm somewhat new to Congress, but yet hypocrisy still offends me. And there's a lot of double talk and hypocrisy in this town. And I'm going to read you a couple of quotes, Mr. Secretary. I'd like you to tell me if you think President Trump or somebody from the administration has said it, or if you think Senator Schumer has said it on tariffs. Quote, tariffs are a necessary step towards addressing the unfair imbalance of China's trade relationship with the United States. Did Schumer say it or did Trump say it?
I would imagine the president.
Schumer said it, sir. Schumer was just a year ago, in February 2024, talking about tariffs being the answer to combat some of those issues in China, specifically ripping off our intellectual property and exploiting slave labor and child labor.
Well, Congressman, I would also note that the many government officials, including presidents, were also in favor of a border wall until President Trump was.
Good point. That leads me to my second question. Who said it, Schumer or Trump, that tariffs are vital to protect American workers, American manufacturers, American innovation, and our national security? Who said it, Trump or Schumer?
I would imagine it was the ranking member.
It was the Senate Minority Leader, Chuck Schumer said it. And like what you said, it was cool until Trump got in office, and now he's opposed to it. My time is about to expire, Mr. Secretary, but I want to commend you for fighting for American middle-class workers. I do think that extending the tax bill with a couple of tweaks like SALT is important. I do think that fighting for our middle-class workers are important, and I implore you to stay on the right path, sir.
Good. Thank you, Congressman.
Thank you for getting that SALT plug in, Mr. Lalota, twice. The chair now recognizes the gentleman from Georgia, Mr. Bishop.
Thank you very much, Mr. Chairman. Thank you for being here, Secretary Bessant. I wanted to ask you some questions about the reports that the administration is cutting IRS workforce roughly in half with a goal of 50,000, including many of the frontline enforcement positions. A recent study concluded that this would result in a loss of $19 billion in foregone revenue just in 2026 and up to $350 billion over the next decade. Such substantial cuts in staffing could cause reductions in voluntary compliance as taxpayers will feel emboldened to cheat on their taxes. And an IRS official previously testified that a simple 1% decline in the compliance rate translates into $30 billion in lost revenue for the government. If the administration is truly concerned about reducing the federal deficit, as you indicate, why would it consider staffing reductions that reduce the IRS's capacity to collect much-needed revenue that could be used to reduce the deficit or pay for critical services? A recent Treasury Inspector General for Tax Administration's report indicates that the IRS compliance workforce would be drastically hit 31%, with revenue officers 18%. They are paying the maximum taxpayer compliance responsibilities that are needed for revenue for the government. It appears that 31% of the reduction in force, and I think since January, the federal workforce has been reduced, and IRS started out with 103,000, and now it's down to 91,600, which is an 11% reduction in the workforce. That's 31% loss in revenue agents, 18% loss in revenue officers, 10% loss in contact representatives, and 10%
SPX sitting on.
It seems to be really, really foolish to
the hourly trigger looking to close the gap above and the gamma flip at 5650.
Briefly,
sir. So I think there are two things here. There's the actual decrease that you just saw.
There is a roll in here. Remember that we're on a 1-minute chart. Whether we break above and roll to go higher or we auto reject here, just note that we are on a 1-minute chart right now. We're close.
IG's report.
There's going to be a 40 or 50% decrease.
And there's a gap to close down below at 560.
Before I took this job, I didn't particularly like the term.
We don't do it then now, right around 11:30, it could happen.
Because on March 22nd, the
Let me
Washington
change
Post-
this. Let me change the subject. Let me move to another subject, Mr. Secretary. Thank you. If you want to elaborate, you can. You can send us.
I'll be happy
letter.
to have my office. follow
Let
up.
me say that since this administration has come to the White House, the price of groceries has increased by 0.5% in only 2 months. According to a recent report by the Groundwork Collective, the price of meat, poultry, fish, and eggs has grown the fastest, up 2.9% since January of 2025. Eggs at a record high of $6.23 a dozen, up from 26% in January 25 alone. What is the administration doing to bring down the cost of food? What is the administration doing to ensure that the impact of the tariffs don't disproportionately fall on our nation's farmers? I've got a list of
Just a note here for you for spread gamma, 1 date, 2 dates, calls, puts.
Of the tariffs on their capacity to.
The low end today is 5,600. We already traded through it. The high end is
Well, a couple of things.
57.25.
Secondly, that we inherited the
which is
food prices, like monetary policy, have long and variable lead times.
a new market high in this run.
Substantially during the Biden administration, it has been brought down 52% in the past few months, and
it just went up the last 2 months. I just told you.
No, sir, I think that's not 100%.
Since January.
There's also some put gamma at 53,
bringing down
56.35 a wall.
costs, transportation.
I'll post it in the Discord for you right now.
Factors in food pricing, so diesel prices across the country have come down, and that will result in lower food prices.
Chair now recognizes the gentleman from North Carolina, Mr. Edwards, for any questions he may have.
Thank you, Mr. Chair. Mr. Secretary, thanks for being with us this afternoon. Earlier this year, I co-sponsored a bill, the Anti-CBDC Surveillance State Act, that would prevent the Federal Reserve from issuing central bank digital currency. Many of the folks that I represent are concerned about the security of such a currency and the privacy of their information were such a currency to be used. Can you give me your perspective and maybe the administration's perspective on the place for digital currency?
Sir, we believe that digital assets belong in the private sector, and my personal view is that having a central bank digital currency is a sign of weakness, not strength, because really the reason, if there is a reserve, say a reserve manager or a foreign central bank holds U.S. dollars, then there is a wide variety of U.S. assets they can invest in. You would create a central bank digital currency just for ease of use because there are no good choices for underlying assets.
And so you're saying you would not be in favor of the Federal Reserve issuing such a currency?
No, sir.
All right. Thank you. Can you tell us real quick, at what point do you believe that our debt levels would no longer be sustainable? And then as the second part of that is, what would that look like? If our debt were no longer sustainable, what would that look like to the American family? We talk a lot about debt up here. We put forth some elaborate graphs and charts, and we hear all kind of economists using big, long words. I need to be able to describe to the people back at home what that might look like in their lives were we no longer sustainable.
Well, it would look like a sudden stop in the economy as the credit would disappear, as markets would lose confidence. And I'm committed to that not happening. And again, a tipping point in debt sustainability is very difficult to pinpoint, but what is not difficult to pinpoint is a trajectory. And the trajectory is unsustainable when the when and if the markets were to rebel against is very difficult to know. I think, just as I talked about the warning track for the X date, I think it's very important not to go on the warning track, and we've got to get to the other side of this and start reducing the debt. And the debt numbers are indeed scary, but the Secretary Yellen and I both agree that it is the debt to GDP that is the important number. So we are trying to both control the absolute level of debt, pay it down, but also grow the GDP.
And so I applaud your approach towards the debt. Give us an idea of where is that tipping point? How close do you think that we might be to that?
Again, sir, I think what the market, having been in market,
The debt to GDP ratio is rolling down. What the fuck are you guys talking about right now?
trajectory that is unsustainable, or are you, as we said during COVID, bending the curve? So the goal here is to both bend the curve, but to grow the denominator and use growth and spending constraint to solve this problem.
And thank you for that. And as part of the president's cabinet and seeing more inside what's taking place than any of the rest of us, what role would you say that Doge is playing right now in prolonging that tipping point and reversing our...
There is no tipping fucking point.
Well, I think Doge or any other measure to constrain the spending is admirable, important, and necessary. And if we don't do that, as I've said,
sometimes I can't listen to this stuff because it's like putting a drill to my head or like hitting myself with a hammer in the head listening to it.
We have a spending problem, and we have to
what are you talking about?
Under control.
Thank you. I've got just a few seconds. Can you tell us what keeps you up at night regarding cyber threats to our Treasury system?
Well, it's cyber threats across the entire financial system, sir. And that's why at Treasury, we are leading the effort for more resilience within the entire financial system, whether it's across the banking system, the payment system, and the Treasury system. As you would have seen, Treasury was hacked last year. We've just discovered an OCC hack that discovered last year. So these hacks are real and dangerous.
Thank you, Mr. Chair. I'll yield.
Thank you. The chair now recognizes the ranking member of the full committee, Mrs. DeLauro, for any questions that she may have for 5 minutes.
Thank you very much, Mr. Chairman. My apologies for being late, and apologies to you, Mr. Secretary, but lots of hearings happening here. So just a couple of points, and then I want to ask my question. It's just a follow-up on this.
Just watch out whatever we do here. The 1 in 5 minute is rolling here flat sideways. Even if we make the break higher, there is a roll here.
The IRS comes in, and we think about the debt. We think about the $2.3 trillion that was the debt really built up with the tax cuts to the wealthiest and the biggest corporations in 2017. We're now looking at an additional $4.5 trillion in tax cuts, which are making their way to, again, the richest and to the biggest corporations. That is debt, and that is something that I don't know about yourself and others in the administration who refuse to see that kind of debt. And the almost unbelievable piece of this is the IRS 2024. We invested in it, able to recover more than $1.1 billion from roughly 1,600 millionaires. Projected at the time that investments in high-end enforcement data and analytics, that an additional $851 billion would result in revenue over the next 10 years. The Inspector General has said IRS lost 30% of auditors under Elon Musk's illegal purge. People who are wanting to ensure that millionaires and billionaires are paying their taxes. And the issue is that we're going to pay for those taxes by taking it out of the hide of Medicaid and of children, of low-wage workers, and of seniors. The issue that I want to try to get to I'm going to make another point, is your comments on, your recent comments that seem to call into question the vitality of the textile industry in the United States and national security. I applaud the administration for the steps they've taken on de minimis and closing down that loophole. I think it was very, very important to do this. We need to go further. It needs to be applied to all countries, not just to China. But unbelievable commentary on the U.S. textile industry. Provides good jobs across this country, particularly in rural areas. The supply chain directly employed 471,000 workers, produced roughly $64 billion in product in 2024. Let me get to my question with only 2 minutes to go here. This is the dealing with standing up for a mechanism in the U.S. to screen our investments in China, to ensure capital, technology, and know-how are not fueling the capabilities of the Chinese Communist Party. I've had a bipartisan bill to do that for years, helped negotiate the bipartisan bill that nearly passed last year, and I strongly support executive action to address the issue. In fact, we got appropriated funding for Treasury to implement the executive order on outbound investment. Mr. Secretary, I understand that the administration is currently reviewing the executive order. There's a clear bipartisan consensus on the need for an outbound mechanism of that screening regime. Let me ask you, do you support the implementation of such a regime?
Thank you, Congressman. This is a very important issue. The outbound security program is an important new tool in our effort to restrict the PRC from exploiting U.S. investment. The program just began a few months ago, and we are learning and we anticipate gaining important visibility into U.S. persons' investments involving PRC entities. We appreciate the interest from Congress, and while legislation is important and helpful, I would like some time for our process to inform any legislation. We would like any legislation to be both flexible and durable.
Well, you know, in your confirmation hearing in January, you noted, and this is a quote, "We should have a very rigorous screening process for U.S. investments in key sectors that could go to China." And in March, you said, "We will make sure that our outbound investment doesn't get used against us. We are going to continue investigating this and where necessary to block it." I heard your answer, and quite frankly, it sounds a little bit wishy-washy. I want to be clear about this. You have expressed support for outbound investment for months now. Has that changed in any way? What's the status of the administration's review of that order? What about the timeline on this, because it's an important issue? And can you commit that your department will enforce this executive order to its fullest extent?
I have not changed my position. As I said, we are looking at what is working, what isn't, and how the best enforcement mechanisms. And when a bill comes forward, again, we want it to be fulsome and durable, and a 2025 bill for all the nuance that goes with this.
Well, I'm out of time, but please understand, we have bipartisan support. It made it into the continuing resolution, but for the influence of Mr. Musk, and it is critically important for our competitive edge. And I don't believe there's any reason for the administration to roll back. My hope is that we will move forward and keep the pressure on in order to be able to preserve our competitive advantage and not cede to the Chinese Communists.
We're in complete agreement.
Thank you. Thank you, Mr. Chairman.
I would not want to interfere with that bipartisan moment.
Okay. And it's bipartisan legislation, as you know.
I appreciate that.
Great piece of legislation.
And the chair will now recognize the gentleman from Nevada, Mark Amadei, for 5 minutes of question.
Thank you, Mr. Chairman. Hi, Mr. Secretary. First of all, I want to thank you for your availability during this time since you've been confirmed and stuff like that. I know nothing's been going on that affects the Treasury Department in any way, and I appreciate having access to you via phone over an issue that wasn't important. So, thank you very much. I want to just ask you a couple of questions, kind of relative to our conversation, and that is, I know that the president has said quit producing the penny. a lot of reasons, arguably you lose 2.5+ cents for every penny you produce in signerage, and you don't have to get up too early to do the math on that sort of thing. But I think in the timing of doing that, if we're going to eliminate the penny, which has to happen here, I would like to know who it is, who's kind of the tip of the spear on your staff at Treasury. I already have the Mint information, but at Treasury, as far as those issues go, and I'll tell you why I want to know is, I think there are some issues regarding what it costs to produce a penny. I don't know if it's going to get you, I don't think it'll get you down to a cent, so it won't be that argument. But quite frankly, stacked up behind it is what it costs to produce a nickel and what it costs to produce a dime. I don't know about the quarter, but anyhow, to make sure that we are at least giving your department and the Bureau of the Mint the most tools necessary to, if you will, untie their hands when they're looking for who they buy their blanks from and stuff like that, that goes directly into what it costs to produce one. So my first question is, who's kind of in charge of that, since I know you've got other things to do, but ultimately, so that we can start that dialogue with where do we go from here, and if we're going to get rid of, and I know there's been legislation introduced in the Senate to get rid of the penny altogether except for collectors. So who's the point man or woman on your staff?
Congressman, it would be my recently confirmed deputy, Mike Faulkner.
Okay.
And I would also say, with the nickel and the dime, the nickel costs more than a nickel to produce, but we are looking at material changes in the materials that would reduce the cost to or below a nickel, and then I believe the dime is profitable.
And I guess that brings me to there is legislation you might want to warn your recently confirmed deputy. H.R. 1278, bipartisan, gives you guys the chance, without coming to us every time, to basically make changes in the metal of that sort of stuff so that you can keep ahead of those sorts of things. So if you would, unless it's sitting here or whatever, it's like, hey, we're going to be calling you up. The idea is to solve the problem, if it's solvable, and move on from there so you guys can do other things with your time.
Yes, sir. We've been reviewing that.
Good. Glad to hear that.
Note that this target has not been made yet here.
Look at the Senate bill. It says no more pennies, and I guess other countries have rounded up to the nearest 5 cents, and my research says, well, it wasn't the end of the world, so.
Well, sir, we are also encouraging rounding down.
Okay, that's good. Great answer. You know what? I'm going to reward good performance. I yield back, Mr. Chairman.
Certainly appreciate that, Mr. Amade. I understand you have the hard stop at 11:30. I'd like to honor that. I want to be fair to my fellow committee members, though, in doing so.
Squeezing higher now into the hourly trigger.
Eligible for a second round, but certainly my ranking member, Mr. Hoyer, would request that he have a chance to ask you another question before the stop.
Of course. Mr. Secretary, first of all, let me say that I believe the Congress is being taken for granted in the policies being pursued. I think, frankly,
getting close to a roll.
Not by you. I'm just talking about the administration in terms of federal employees. I represent 77,000 federal employees who came here to work for the government, and that's why they're here. I've worked very well with Republicans throughout my career, which is now in its 45th year. I want to do that some more because I think that's the best interest of the country. I believe you're one of those who has a shot at keeping us on a somewhat even keel. I mean that as a compliment, but obviously it's also a concern. When you say, and I want to reiterate this, that we have a spending problem, and I retort to you, no, what we have is a paying for problem. If I make $1 million, I can spend $999,000 less taxes. But if I make $500,000, I spend $1 million. That is a paying problem because I don't pay for it and I accumulate debt. That's how debt goes. Now, I was here in the Reagan administration some period of time ago. We were told that the tax cuts that were passed in 1981 were going to pay for themselves. They did not. It perhaps will surprise you, maybe you know this figure. The largest increase in the national debt was under Ronald Reagan, the only president who had a triple-digit, 189% increase in the national debt during the course of his term. It might also surprise you that Clinton is the only one who was 30% or lower since Ronald Reagan. Clinton is the only one who balanced the budget. Now, one of the reasons we did so is because we had bipartisan objectives. The Republicans wanted to cut taxes, which is their mantra, and we wanted to invest, as we call it, as opposed to spending, in children's education, in people's health care, in safety, et cetera, et cetera. If we continue this logic that we have a spending problem and discount taxes as spending, when we did the tax increase under George, in 2017, you may recall, the Republicans gave themselves a $1.5 trillion headroom. The reason it was limited to that is because the senator from Tennessee wouldn't go higher than that. So in other words, a $1.5 trillion unpaid for headroom to give a tax cut. That is spending because you're cutting prices while increasing costs. That's what causes deficits. Some of my Republican friends, I'm a strong supporter of national defense, but I do not delude myself that raising $150 billion in national defense expenses don't cost taxes. We don't have $150 billion to either cut taxes with or to spend money with, so we borrow. And when my friend talks about hypocrisy, we all know if you spend more than you get, you go into debt. And that's what we do as a country on both sides of the aisle. And we need people like yourself to be honest with those with whom you work and honest with the Congress of the United States in terms of the ramifications of the actions. I know you are a strong supporter of permanent increase. You're not a strong supporter of paying for it. And you can cut all of non-defense discretionary spending, and you won't get there. And this game that Mr. Musk has played, he had no sense of the ramifications of the actions he's taken. He knew how to do it. He was prepared. As one article in the Atlantic Journal said, the blitzkrieg, which our speaker calls flooding the zone, been pretty effective at that, just trying to watch where the ball is and see if you can respond. But, Mr. Secretary, I have a lot of questions. I'm going to send them to you, ask them to you, and would like to take some time with you on that. I have great respect for your background and your abilities. And I am really praying that you will bring a voice of reason and rationality to our deliberations.
1 minute left. They're going to cut this guy off.
Over, and I appreciate the chairman's forbearance, but this is serious business. Very serious business. And I agree with you. A $37 trillion debt is not sustainable. And we all have to do it, but we have to do it together. That's the only way it will get done. Thank you, Mr. Chairman.
Thank you. Do you have a response, Mr. Secretary?
Congressman, thank you for that. And I would note that while President Reagan substantially increased the defense budget, the Clinton administration was able to capitalize on the peace dividend. But as you said, the defense budget dropped dramatically post the fall of the Iron Curtain, which contributed to the fiscal soundness. And through, as you said, through bipartisanship, working with Speaker Gingrich, they worked together. So I would hope that we could do that again.
Which, by the way, cost Gingrich's job. The right wing of his party was incensed that he did that. And what it did was had a rational policy because both sides participated.
So, the senator from Tennessee is actually my neighbor. So I see him quite often. And look, there are ramifications here. And
you're not talking about any current senators from Tennessee. He's left.
No, I know.
Yeah, okay.
Senator
I want to
Corker.
make sure we had the right Tennessean.
Senator Corker.
Yes.
Yes. Is my neighbor.
Uh-huh.
So, and I look forward to inviting a bipartisan solution.
Thank you, sir. And with that, our time is concluded. I'd like to thank you, Secretary Bessant, for being here today.
Watch out for a roll here.
The Ranking Member Hoyer has indicated who has questions. They're going to submit those questions for the record. And we ask any of the, please submit those questions to the subcommittee staff within the next 7 days. I would ask that you try to respond to them within the next 15 business days after receipt. Thank you. With that, the subcommittee stands adjourned.
Thank you.
All right, that was. If I had any takeaway from this, it was garbage. That was pure garbage, or at least in my viewpoint, it was. Let's see. There's a few things in there though that probably we need to discuss. First one would be greedflation. I've noticed that argument come up in the past week. That well, number one, so greedflation is a weird thing. When you're front running tariffs, the threat or fear of tariffs, normally that's where greedflation kicks in the beginning of that. Now, after that effect, the real issue is not only are let's say I'm company X or company A, and I buy, or my good is mainly the input in my good is a tariffed item from China. Let's say I buy, I don't know, sippy cups from China. Manufactured in China, the whole item comes from China. I pass that cost on to you, right? Let's just say I do. Then we're going to talk about that too, because we got to talk about who pays for tariffs here in a minute. But my initial reaction as that company selling goods is I get a tariff on China, right? And let's say I don't take part in greedflation in the initial front running, but I actually pay the full tariff as the company. My initial reaction is going to be to pass that cost along to you. I'm lazy. I own a company that buys sippy cups from China. So I'm not going to do anything. The initial reaction from a company is to attempt to do anything but nothing and just pass that cost along to you. Now, that's not the greedflation thing, but that's where we get the who pays for tariffs. We're going to, this Bessant's response was it's more complicated than that. And we'll get into that part of the conversation here in just a minute. But for now, let's say I buy it. My whole input for my product is, is from China. Right now where we are, if I pass those costs along to you or attempt to, and company B does this, company C does this, you as the consumer feel that pain, right? Your costs are going up. Or let's say it's company A, B, and C, and you own your own company. This is company D, and you don't sell any product like this guy talking about the walnut clock. So company D, I sell walnut clocks, and my walnut comes from the United States. I shouldn't increase the price of my walnut clock. I'm not affected by the input costs from China, yet I do raise the price of my walnut clock. Why is that? It's because that company is still paying the net effect of those tariffs everywhere else and where they do business. Does that make sense to any of you? Inflation as a whole is going up for that company, for the people that work there, for the services, for everything else surrounding that company. Their gasoline goes up, their insurance goes up. Greedflation's already kicked in prior to, during the threat of tariffs. Now, let's talk briefly also about, so the net effect here is, even if a company does not have the input costs, they still are affected elsewhere from blanket inflation going up. Now, Bessant, or this guy that was talking about that, hey, why is the walnut going up too? But he doesn't want to accept that inflation is a blanket thing that affects everybody. It's the same reasoning why, if you as the consumer, let's say you have a job, right? You go to work every day, and maybe your whole life is not, you're like, I don't pay for Chinese products, right? You're still going to feel that inflation, so you want your wages to rise regardless, right? Of course. So you have costs going up across the board, and you also want wages to increase to combat that, even if it's only temporary. And the reason I want to talk about that temporary, and this is another effect here where companies will initially attempt to refuse your wage growth, which leads to degradation of your ability as a consumer to pay, theoretically, unless you're already in a good standing as a consumer, which you are, believe it or not, to absorb these new costs without wage spiral to the upside. So companies are going to attempt not to pay you more during this time period. We also talked about this last week, where companies scared you into moving from company to company as well on layoff fears, even though there are no layoffs right now. So this is like a huge moving machine right now, right? And we're going to talk about who pays tariffs too at this moment. So as I think we've discussed this, I've related it to the guy selling beer, right? Remember, I was in Chicago, and I'm like, oh, this guy's trying to pass this shit off on the consumer through a news article. And the important part about tariffs is this. You can look this up anywhere. You can read a book about this, go to school for it. It's not rocket science. And it's part of it's efficient market theory, but the idea is initially you get, when we have tariffs, you take a one-time hit to inflation into your pocketbook, and that over time, that inflation actually does not become sticky. It's not persistent. And you've heard the Fed speak about this, like persistence in inflation, and how it should not stay persistent, and that they'll monitor if it does. And the idea behind this is a lot where McDonald's stands right now and their report that just came out. McDonald's, people just figured out that they could eat elsewhere, right? This was 2 years ago. And there were other companies offering a better product than McDonald's for the price value. What was McDonald's original response to this? Change nothing. If anything, raise prices. When that no longer worked on you as the consumer, what did McDonald's do? They tried to obfuscate those input costs to their company. They literally, the CEO literally came out in an earnings guidance and said, well, we revamped the value meal for you. In the hope, like, these companies think you are dumb. Like, dumb. Like, you are as dumb as you could ever be. So what was McDonald's next choice? Well, we're not going to change anything. We'll just rewrite the value meal. And if you were to ever, which most their proposition is, you're going to forget the old value mail as long as you perceive that you're getting a value. Does that make sense? So they rewrote the value mail and said, oh, we listened to you. Here's your new value mail. But in fact, you got even less, and they increased prices on you again. We come into this last McDonald's ER, and what do they say? Oh, we fucked up again, right? That something's wrong with the consumer. Whereas recession is coming, right? And the reality is these corporations will do every single thing possible to not change, to take less money, charge you more, and pass these costs on to you permanently. Now, does that work? It does not. Theoretically, at least, depending upon the economics you ascribe yourself to, the idea would be that either they or someone else will come along to offer you a better deal. So either McDonald's is going to find a way to shrink what they give you. You've noticed that in products, right? They'll put it in a bigger bag, but less product. They'll just make it smaller. They might use an inferior product, right? We all witness that, right? You buy a shirt, fucking thing stains immediately and it's threads falling out, right? So you see that, like a company will do any and everything they possibly can before they actually give you or eat those profits. Now, along that time period, companies can lose tons of money. They don't care. They can go bankrupt. They don't care. They can be replaced by a different company. They don't care. They will push until they're either replaced or they make the choice, we'll find somebody different to give us whatever that input cost is. If it's better or if it's the same or if it's less. And if not, they literally go bankrupt. They literally will work sometimes with no profit at a loss for years until they recover. But that's what they do. That is like a common thing in inflation. And the truth is, who pays for tariffs initially is always the consumer, but not over time. You eventually actually win over time. And what also happens is this. It's not always completely cut and dry as you react as the consumer and say, no, I'm not buying that, right? I'm going to go eat Culver's or I'm going to go make burgers at home or whatever that is, right? Those companies will seek out cheaper input. They'll go to the place that they import from and say, hey, can you help me on the aluminum cans, right? Like the beer guy, right? They'll even lie to you initially, won't they? This is the greedflation in the beginning. This guy was saying, aluminum cans are going up. It's terrible. I'm going to have to double the price of my beer. And I'm like, wait a minute, your aluminum can input is, if you had $1 beer, the beer can probably costs 15 cents. And some of that's printing, like maybe 7 cents is aluminum can. And it's gone up 20%. What is that, 8 cents? So you're doubling your bottle of beer for a 1 cent increase. And not only that, that beer guy can go to the guy that supplies the beer cans and force the beer can guy to go to the guy that supplies the aluminum and say, I need you to eat some of this, a quarter penny, half penny, whatever it is. But they're lazy. They don't want to do that. They eventually will, though, or a new purveyor of aluminum or aluminum cans will. So eventually those costs do pass on to corporations. They will take those hits at their bottom line. They do. So when you hear the consumer pays for tariffs, only one time typically, and those costs do typically roll into, or as time passes, they subside. You will see replacement to those goods that you're trying to buy. Now that is true. So when Bessant responded saying, that's complicated, I agree with Bessant. Bessant could say, yeah, consumers pay the initial spike in prices, but over time those costs are or passed along to the producers and the end line company that sells you your goods. So that's not an easy question to answer. Although you as the consumer don't care, do you? You're the one, and I'm the one that feels that initial pain in the costs of goods through tariffs. We take that hit, and you're getting hit on all sides, from wages stagnating, and you're getting hit after the greedflation to the entire economy, or the entire economy now charging more, either through the initial greedflation or just from cost of operating, right? Operating just right now. And we're not quite there yet, but we're getting there. We're on the cusp of that major hit, aren't we? So when you see, or if you see, if we continue on this path, and let's say you see inflation ramp at this point, you would not assign it to greedflation. You would assign November through, I want to say March, April, May as the greedflation stage. But when we're in this stage right here, it is because all costs go up at this point. Or they will begin to go up. It'll be a process that will take, 1, 2, 3, 4 months, 6 months into a year where we start getting these shocks of inflation across America. You'll see it everywhere. It won't just be like some company that buys sippy cups. It'll be your services, your goods. It won't matter. It'll be pervasive and everywhere, theoretically at least. Now, even if we have that situation, the idea would be that some of these companies will go bankrupt. Some of these companies' profits will reduce, and there will be other companies that step in to take these companies' places. This is why you hear companies like Amazon saying, we're ready to start buying businesses, right? And we're getting into the stage of wanting to scoop up businesses that are going to go bankrupt. And that's actually twofold in this specific situation, where you have companies that will go bankrupt regardless of outcome of this tariff war. There will either a company, if they stop this tariff war, and a company that sells only sippy cups gives in and says, I'm going to buy all these new sippy cups once I run out of stock at this huge higher input rate of taxation, or tariffation, I guess, right? And if they stop tariffs, that company is fucked, aren't they? So there's going to be another company selling sippy cups at a drastically lower price, right? Who is that company? Amazon saying we will be that company if tariffs go, or if this tariff war ends, right? So there'll be damage done to some of these companies with high import costs. You even see it right now where some companies are like, yeah, we loaded up on stock. You even see other companies saying right now, we'll just shut down until tariff war ends. We're eternally optimistic as Americans, and even if that tariff war doesn't end, that company will not restart until everyone or all the stock has been depleted pre-tariff increases, which is kind of sad, right? Kind of sad for a lot of these companies that they must pause, literally pause until this ends or doesn't end. So when you hear this stuff, it's like it's some of it's true, but there's more than one answer that's right to some of these questions that are being posed, or some of the political jabs that are going on in these conversations. When you see things like this, to me, this was garbage. I got nothing from this conversation inside of this hearing. This hearing to me was like pure garbage. One guy's talking about pennies and nickels and times and quarters. Like, oh man, that ain't worth a nickel, man. It costs more than a nickel to make a nickel. That nickel's used so many times over that the input cost of it is meaningless. It really is meaningless. It's what would you call that? It's not a straw man argument, but it's pointless. That it costs more for a penny or a nickel. There's other reasons to get rid of those denominations, but that one's an easy one for people that don't think. to like to harp on. It's good for politics, and that's about it. Okay, so that meant nothing. We came up here. We traded the hourly trigger. I'm going to take a quick break here. There's still a little bit more gap left above, and there's a gap below. There should be some kind of a pullback here. It is 11:50 in the afternoon. We'll take a look. We'll do a pre FOMC meeting review today. Let me put this up here. I got to take a quick pee here. I got to go potty really quick. But be careful of this trade lower. Be careful of this like roll down and then an attempt to go higher into the bell and trade this like 564. But we are likely roped in. We are likely roped in here into this close. You know, traders brace and wait for Jerome Powell bullshit. Let's put this over here. 1600. Where we get right down and then just tied into this close, awaiting Jerome Powell tomorrow. We got a lot more to go over here as well. I had a brief. I have a brief that's posted, but I had a second brief I wanted to release to you this morning, and I got rid of it. I was like, no, we'll discuss it in the stream today. So just give me a little bit of time here. There is a window opening to the downside that's kind of brutal for tomorrow, and I'm not quite sure what to make of it to the downside here, or why there's a feeling of that we have time in market to do this. But it could be good or it could be really bad. So we probably need to go over that today if we can at some point. Just give me a few minutes. I gotta go potty. I've been drinking like coffee and water all morning, and my bladder is full as fuck. So just give me a few minutes here, and I'll be back with you guys in just a moment. Gotta go pee. Oh. Just also note, we're not quite there yet. I'm going to get rid of this here for a minute. We got a little bit of a bear plane showing up right now. And I've got the news squawker back on for you here. Hold on one second here.
5 minutes ago to get the EIA steel report. And Trump has arrived outside the White House front door. We'll try our best to hear what Trump says if he does respond to reporters. Okay, asked about potential trade deal, doesn't respond, doesn't say anything, just goes in. So now we move on to the next part of the schedule of the bilateral meeting between Trump and Carney. As I said, was scheduled for 11:45 AM Eastern Time. The video is on the feed, just a bit lower on the feed for you to watch when that does go live eventually.
All right, here you go. I'm back now. All right. One quick second here. We want to take a look at something important here. Now, this could be perceived. This can be looked at two different ways. Give me a sec. Or where am I at here? That is downtown. Triggers. We want to talk about something here. Okay. We want to take a look at this for a minute here. I read a story yesterday. Well, I read more than one story. I want to say I read 4 or 5 stories yesterday.
Expecting the EIA steel report.
Turn this off. This ain't going to matter.
Voice news disconnected.
So yesterday I read, I want to say 4 or 5 stories. I read a story on Axios, story on New York Times, a story on WAPO, and somewhere else, some other. And a story about a trader from Wells Fargo, and they really sounded like more like please. They were please, except for the Wells Fargo one. Wells Fargo one said that their outlook was for us to still trade 7,000 this year. Excuse me here. 7,000. Here's a daily candle chart. This is important. Now, is the door shut to 7,000 this year or even the beginning of 2026? Theoretically, a recession has been priced in. We did a major correction, and then this last leg right here, this priced in our recession. We could trade all the way down here, and we'd still be valid in this recessionary trade. Now, what's being proposed is that we trade up here, we fail this all-time high, we do go sideways for summer, we get our doom trade down below. Whether we cleared this out now or later doesn't matter. But then we would trade up into an all-time high at the end of the year, or even higher. Even higher into the beginning of the year up here. That door is not yet closed. That guy from Wells Fargo, I think he has a valid argument, but there are things that need to happen for that door not to close. There should be a feeling or thought of no time to waste or lose here. In truth, we're coming to time is not on the side of that argument. And not only is time not on the side of that argument, but it's not just time, but it's also the how do you describe it? Like I relate it to like can't stop, won't stop, where the market just keeps putting highs on the board, even if they're minimal. And we're not doing that as of the moment. And the impetus here would be that we're going up, 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 even if we have down, but to continue higher. You know, like there's no time. No time. We have to get this done, right? And we're not doing that today, are we? Yesterday, on this candle right here, you watch this candle in particular. This candle from yesterday was an attempt to shut the door on that thesis. It's not the candle that the guy from Wells Fargo wanted to see. And even this morning, this low and this close would be another attempt, depending upon where we close today. If we close without getting a new high, and the fact that we're parking underneath potential volatility with not only the FOMC, but we have speakers on Friday. We have a litany of them. We have Fed speakers from 6:15 in the morning on Friday until almost 8 p.m. on Friday. Why? Why do we have those FOMC speakers? The next question here would be, if you put us underneath into this potential volatility, is it to sweep back and catch this low or even a low farther down? Is there something from the Fed that could send us packing to the downside? This invariably closes the door to that trade into the fall or into the summer and into the all-time high trade at the end of the year. So this is a major inflection point. And to even back that up further, I want you to also remember two other things. The largest retail buying on record right now, largest retail buying on record was the month of April. Retailers bought all of this. We know that retailers love to be made bag holders. They also sold out on Friday. On Friday, we had some of the largest selling by retail since the beginning of April buying spree. Now, on a positive, who has stepped in are CTAs, right? Vol control funds, commitment of traders is there. Asset managers are there buying right now, but retailers are not. And that's who these guys are over here, too. So retailers are exiting right now, whether you can see it or not. Even if professionals here are buyers here. So that's, I guess, positive. But your retailers are attempting to get out right now of the market. They just want off the pony ride, right? They don't want the volatility. Another negative, though, right now is what? You're not seeing Bessant nor Trump come out in attempt to quell markets. There was some talk yesterday from Bessant saying that they've got some deals with countries. He didn't mention those today. Trump came out earlier on Truth Social and started bashing China again, right? Over this weekend, we got more Trump tariffs, right? Movie tariffs. Talked about that over the weekend, didn't he? Right? Bashing on the movie industry and opening up a Pandora's box. He also mentioned what? Prisons, right? Like prison stuff. And we also had some laddering this week of the tit-for-tat trade war with China. If you noticed, Russia this week, between the 7th and the 10th, has their Victory Day parade. They're meeting with, or Z is meeting with Putin this week to escalate war. Tit for tat, publicly to provide arms to Russia to fight in Ukraine. That is invariably an escalation of war, not just trade war, but now moving into Cold War between the United States and China. This is very reminiscent, if any of you are older and remember the domino effect with countries. In the Cold War, we fought against Russia through proxies, right? And now, and it's not to say that China didn't already give arms quietly, but this is now official, expected to come out this week, into this weekend. That would make our trade war escalate into a Cold War with China. So have you and I seen any de-escalation? Not much. Bessant has come out and said a few things. You've heard some whispers about a trade deal with India. But in fact, we're not seeing that stuff in here, right? Which is making the market hesitate here to do that breakout and trade higher. When you are looking for what? If you're a bull, what are you looking for? Tone down, right? You're looking for tone, even if we haven't shifted, even if the war hasn't ended, even if they're just trying to buy time, you're looking for what? Toning things down, right? Slowing down trade war, toning down Cold War, toning down the messaging to other countries. We're not seeing that, are we? So you need to be aware of this shift here. Now, there is one positive note here, or another positive. So all this negativity, there is one positive note here. If we have this no fuck you, we do have this daily trigger here that is very strong right now. Maybe we just need to backtest this daily trigger before moving higher with confidence. But if we lose this daily trigger because we're lining ourselves up with volatility, right? You ever notice you guys ever notice that sometimes we go into these events and we speed run them, don't we? It's almost like they know before we know, or we know before they know. You ever watch we get into some of these events that are considered high volatility and we front run them, we ramp before we get there, like yesterday we should have, or could have, or didn't, but we're watching for it. Are they going to give us a new high on Friday or not? Are they going to do this today? Or are we going to fail the high today on Tuesday, but then keep ramping through FOMC or not? And we didn't yesterday, did we? And even so, if we didn't yesterday, right, failed to get that high tick, right? Even though we figured we would fail this one and drop today, we knew we'd likely close this gap out before going higher. But you want the full package, don't you? Tone it down, tone down the rhetoric, some decent announcements. We saw that 2 weeks ago, didn't we, down here? We saw the toning down of the rhetoric. We saw, hey, things are working out great. Don't worry, we're going up, bros. But that's not happening here, is it? We're not seeing that just yet. We don't know if that will come or not come. We don't know because we don't have something to look in the future, do we? But as of this moment, we don't. And the reason I bring this up is because of this. No matter what time frame you are on, if we're going to escape this, you are looking on these daily candles for what the open and close is on that day. You want to see with confidence that we're moving higher. We take out that prior high, right? We could confidently back test that daily trigger, right? We take out the next one like it's nobody's business over here. Nice back test over here until we fail, right? Whether that failure is here or that failure is here does not matter. We know once that failure happens, what happens? Ooh. Bloodbath, right? Unless we go all the way up to all-time highs, we get a bloodbath. Here, does not matter where that bloodbath comes. And I want to show you simply what this means here, the importance of this zone. I want you to remember closely something here. I want you to remember this monthly trigger. Hold on one second here. Am I losing the stream? Yeah, we're okay. I lost the stream there for a minute. Hold on. I want you to understand what the importance of this is. This monthly trigger is trend. No matter what anyone tells you, this is up. This is the stock market trend. That it goes higher. It doesn't mean we can't go down here, blast down, and continue higher, off and running. The real danger is if we break underneath this hourly trigger, we make the new low. And we make the second leg down. If the rhetoric doesn't stop, if the laddering becomes more aggressive and dangerous, if we get price shocks or shortages. And I want to show you exactly what this means here. This weekly trigger, this daily trigger, nice squeezing right now, closing that gap, by the way, and this monthly trigger. So I want you to look back in time over here to 2008. And I want you to watch this closely right here. I want you to see where we failed. We tested this monthly trigger. We got thrown back down. We went back up above the weekly, but hucked right back down below it. And this was the change in direction to our market. I want you to see this blue line coming up and then flattening here, which has not yet, or is yet to have happened and does not happen yet. I also want to show it to you again back in 2001. Same thing took place here. Came up, retested the hourly or the weekly trigger, and we rejected to the downside. for our second leg to the downside. And this one in particular is big. Last time we did that again was back in 1930, and World War II was the other two times. The 4 times we did that was back in World War II and 1930, or a major recession or depression. Go back over here again. Back over here again. So when people talk to you about, like, what's the importance of this? What are we looking for? What do you want to see? If you have a bullish outlook, what do you want to see? You want to see the push higher. You want to, regardless, see the push higher. You want to see the push higher, don't you? You don't want to give any of this up. You don't want to give any of this up down there. You need to be moving with purpose to the upside and escape velocity so that when you come back down and the work that it takes to backtest this daily trigger, that it holds. You want to close the door to this stuff as long as you possibly can. If you cannot, if we run into resistance and rejection, there. Resistance and rejection here, telling you no that the way is lower, you will get panic. That's green, but it should be red, but you get it, right? You cannot have this. You have to break out. You have to have the will to go higher, regardless of what you think should happen, regardless of the situation in the economy, regardless of the situation in the business cycles or any of that stuff. You have to get higher. There is no like, oh, let's go fuck around down here. Let's go close that gap. Let's go down here and mess around. There's no messing around. There's none. Higher. The door is closing on bulls. Not closed yet. But there is the door closure. That is the attempt to close the door. This is the big fuck you here. Trying to tell you, no, way is lower. So if anyone asks, or if anyone talks to you, asks you what if this means nothing, this is everything. This is your second leg to the downside. Must break out. If you're a bull, this is what you got. You got to get over this. There is no other way. Back to what we're doing. Gotta go back to what we're doing. Yeehaw, daddy. Nope, wrong side. Hold on here. That was nice right there. Woo. SPX Gamma, if you want to have a look at it. Sellers coming back in again on the half-an-hour trigger at 56.50. We want to watch here for tomorrow. There's a door opening to the downside on tomorrow for an extra leg here to the downside to go higher. I don't want to see that get filled tomorrow. You have 1, 2, 3, 4, and 5 to the downside. Or we have a breakout 1, 2, 3, 1, 2, 3, 4, 5 in a way. SPX Gamma for today, 1 date. We are right in rejection alley here. The next stop to the upside is 57.25 for calls. Trump coming out earlier and saying USMCA actually very effective. People have to follow USMCA. That's some positive news. He was the one that negotiated USMCA and tried to break it. He also says that it's the USMCA is a transitional step. He may have forgotten that he was the one that negotiated that deal. Trump administration to garnish wages of 5.3 million defaulted student loan borrowers this summer. Canada's PM Carney goes out to say we're looking for opportunities to work together with the U.S. Trump saying, I don't know if it's necessary to renegotiate USMCA anymore. That's positive. Trump, we will possibly start to renegotiate USMCA. That's negative. Trump, we will possibly start to renegotiate USMCA. That's negative. Trump, we will be friends with Canada. That's positive. Trump asked on concessions, I want friendship with Canada. Trump on Canada as a 51st state, it takes two to tango. I don't know what the fuck that means. Trump won't discuss 51st state unless someone wants to discuss it. This is now reminding me of his run for third term for president. Trump saying, going on to say, United States has an abundance of energy. Canada's Carney firing off, Canada is not for sale, won't be for sale ever. Trump, we want to protect our automobile business. Trump on China, they want to meet. He goes on to say China's doing no business right now. That's false. Oh, Christ, it's so tiring. By not trading with China, we're losing nothing. I agree with that. I'm actually on board with most of the stuff that they're doing, just not how they're doing it. What else we got here? Trump, China wants to negotiate and we will meet at the right time. Bessant was truthful today in saying that China has not spoken to Trump. Delayed reaction here from the stock market to close the gap to the upside, right back where we started. Trump, Chinese ships are turning back in the Pacific Ocean. By the way, I guess 76 Russian ships went into the Baltic Sea today or something like that. China's economy is suffering from the lack of U.S. trade, Trump says. The U.S. deficit with China turning due to tariffs. And that's all I've got from Trump here. For Trumpisms, the mixed bag of diarrhea, to say the least. Spoo's giving up the squeeze to the upside. We'll see if it can hold here. I need to impress upon you the importance of the breakout to the upside. The gap still has not been filled lower here. No gap fill yet below. I cannot impress upon you the importance of where we are, this weekly trigger. Even if we were to squeeze up and trade, let's say 5,800, 5,900, any of those high numbers, bulls are still dealing with the retracement. The back test to come back to the weekly and the daily trigger is still, they have to deal with that. They still have to deal with an all-time high. There's no way that bulls are out of this that easily. And there's an attempt right now. It began yesterday on yesterday's high, not getting a new high to beat Friday, which the expectation would be there'd be a new high yesterday, and then we'd have a failed high today to the downside and get roped in for tomorrow's FOMC. But if you start doing this like rope-a-dope, you start closing doors. There's doors, like they're not closed yet, but there's an attempt to close them, and you're not seeing what we need to see for the escape. Escape velocity not there at the moment. Yeah, I was flat there for a minute on my trade. Like to a tick. Here, you want to get out? I'm still not out, though. It looked like a liquidity grab to the downside, to be honest with you. That did not look good. That looked like positioning for downstairs for tomorrow. Trump continuing on saying, announcement over the next few days, not necessarily on trade. Trump on about Canada becoming part of the U.S. I say never. Say never. Trump on trade deals. We're not chaotic. We're flexible. I would say that matters if we were in a dispute, but we're not in a dispute any longer. Trump on timing of deals. We don't have to sign deals. In some cases, we'll sign some trade deals. Trump on trade, we will present a number. We'll put down some numbers. The country is open for business. Let me see if I can get him speaking right now. He's really on a tear right now.
That we disagreed with the way they viewed the deal, and we ended it,
He's all over the fucking place.
pretty much. The USMCA is great for all countries. It's good for all countries. We do have a negotiation coming up over the next year or so to adjust it or terminate it.
Mr. President, I'll say a word on USMCA, if I may, Mr. President. It is a basis for a broader negotiation. Some things about it are going to have to change. And part of the way you've conducted these tariffs has taken advantage of existing aspects of USMCA. So it's going to have to change. There's other elements that are come, and that's part of what we're going to discuss.
During the campaign, Prime Minister Carney talked about the American Trail. How do you react when Canada decided not to shop in the American store as much as before and decided to partner with other countries?
Well, we don't do much business with Canada from our standpoint. They do a lot of business with us. We're at like 4%. And usually those things don't last very long. You know, we have great things, great product. The kind of product we sell, nobody else can sell, including military. Look, we make the best military equipment in the world, and Canada buys our military equipment, which we appreciate. But we make the best military equipment in the world by far. The missiles, the submarines, everything. Everything we have is really top notch. I rebuilt our military during our last term. Stupidly, we gave some away to Afghanistan, which shouldn't have happened. But that was, I think it was the most embarrassing moment in the history of our country. It was just very incompetent people. But if you look, the man that's now the head of our Joint Chiefs, he led the attack on ISIS for me. That's why he's the head of the Joint Chiefs. And Raisin Kane, he was unbelievable. And as you know, we defeated ISIS in 3 weeks. It was supposed to take 5 years. We did it in 3 weeks. And he ran the campaign. I said, I like him. But I knew him before. I went to Iraq, and we agreed to a plan, and that was the plan. And as you know, we did it in record time. So we have, you know, we have the best equipment in the world. We have the best, a lot of things. And but Canada, it does a lot more business with us than we do with Canada. Yeah.
Mr. President, your investments, Mr. President, when do you think the investments that you've announced, the trillions, will finally hit the economic data this year?
When you're saying about the tariffs?
No, about the investments that you've announced. You've announced.
Oh, it's hitting right now. Look, they're already starting AI plants. These are not people that look for financing. That's a good thing. You know, in real estate, you get a site, then you have to look for financing. You have to get your zoning. You know, 5 years later, you start building. You get a bank, then the bank's no good. These people have massive amounts of cash. The CHIPS Act was a ridiculous thing because that doesn't get them to build. All we did is hand very wealthy companies money. The CHIPS Act that was done by Biden, billions. We give them billions of dollars. They don't even have to do anything with it. And then if you weren't, if you didn't have, and I don't want to be a wise guy, but if you didn't go with the DEI, if you didn't go with all of the different things woke, if you weren't woke, you couldn't even use the money. You had to have a certain percentage of this and that and that and that. It's impossible to have. The companies actually complained to me. They say they gave me all this money, but nobody can get these people to do anything. I mean, look, President Obama, and if he wanted help, I'd give him help because I'm a really good builder and I build on time, on budget. He's building his library in Chicago. It's a disaster. And he said something to the effect, I only want DEI, I only want woke. He wants woke people to build it. Well, he got woke people, and they have massive cost overruns. The job is stopped. I don't know. It's a disaster. And I don't like that happening because I think it's bad for the presidency that a thing like that should happen. He's got a library that's a disaster. And he wanted to be very politically correct, and he didn't use good, hard, tough, mean construction workers that I love, Marco. I love those construction workers. But he didn't want construction workers. He wanted people that like never did it before, and he's got a disaster in his hands. Like millions of dollars, really many millions of dollars over budget. And I would love to help him with it, or somebody else. I could recommend professionals. But it was not built in a professional manner. By the way, nor was in California a little train going from San Francisco to Los Angeles that's being run by Gavin Newsom, the governor of California. Did you ever hear of Gavin Newsom? He has got, that train is the worst cost overrun I've ever seen. It's like totally out of control. So then they said, all right, we won't go into San Francisco. We'll stop 25 miles short. And we won't go into Los Angeles. We'll stop 25 miles short. It's hundreds of billions of dollars for this stupid project that should have never been built. And then they realized that it would have been a lot less costly if we just gave limousine service back and forth and gave it free. They would have saved hundreds of billions of dollars. They have airplanes that go there for one 1/100th the cost. And they have cars. They have a thing called the highway that goes back and forth. It's not fully utilized. And they got involved with this project. And Gavin, you know, I always liked Gavin. I had a good relationship with him. I just got him a lot of water. You know, I sent in people to open up that water because he refused to do it. And we just got him a lot of water. If they would have had that water, and if they would have done what I said to do, they wouldn't have had the fires in Los Angeles. Those fires would have been...
Spy trying to turn up right now.
If you think about it, and you got to take a look at this, it's the worst cost overrun I've ever seen. I've watched a lot of stupid people build a lot of stupid things, but that's the worst cost overrun I've ever seen, what's happening between San Francisco and Los Angeles. And you ought to ask about that, because this government is not going to pay. I told our very great new Secretary of Transportation, he's doing a good job, Sean Duffy, I said, we're not going to pay for that thing. They are just, it's out of control. This is something that you don't have things like this. It's not even conceivable. Like 30 times over budget, 30 times. It's the craziest thing and now it's hundreds of, it was supposed to be a simple train. And I think the media should take a look at it. And
market looking for any reason to go up.
I'd love to see that, but I don't think he's going to be running, because that one project alone, well, that and the fires and a lot of other things, pretty much put him out of the race.
Listen to that crowd of reporters.
What changes would you like to see to the USMCA? Or what changes would you like to make?
We're going to work on some subtle changes, maybe. I don't even know if we're going to be dealing with the USMCA. We're dealing more with concepts right now. Look, right now, we're doing trade. We have trade. They're paying a tariff on cars and steel and aluminum. And I think we have a baseline of 10% or something like that for the tariffs. But
are they trying to
right now, going no further, but we have an agreement. We did something with even parts. You want to discuss that, Howard, with respect to Canada, which helps Canada out?
Sure. So we've made an arrangement with the car companies that 15% of their USMCA parts are included, and then 15% of foreign parts from the manufactured suggested retail price are not tariffed, to help domestic manufacturing really thrive.
So
this sounds like trying to tone down the doom.
A lot of these companies already have factories. And
Bessant earlier gave inaccurate tariff levels.
So we gave them a pretty...
They're giving inaccurate tariff levels now for Canada, too.
Is there anything the Prime Minister can say to you today to change your mind on tariffing Canada?
Watch out for this gap fill to the downside.
Is there anything he could say to you in the course of your meetings with him today?
So you can see it still has not been filled down here.
No.
Why not?
Just the way it is.
What's your first thing? If Canadians don't want it, would you respect that?
Sure, I would. But this is not necessarily a one-day deal. This is over a period of time they have to make that decision. Yes, go ahead.
Yeah.
They're talking about the period of time, buying time right now.
View on this is not going to change on the 51st day. Secondly, we are the largest client of the United States in the totality of all the goods. So we are the largest client of the United States. We have a tremendous auto sector between the two of us, and the changes that made have been helpful. 50% of a car that comes from Canada is American. That's not like anywhere else in the world. And to your question about is there one thing? No, this is a bigger discussion. There are much bigger forces involved, and this will take some time and some discussions, and that's why we're here, to have those discussions, and that is represented by who's sitting around the table.
See, the conflict is, and this is very friendly. We're not. This is not going to be like we had another little blow up with somebody else. That was a much different. This is a very friendly conversation, but we want to make our own cars. We don't really want cars from Canada, and we put tariffs on cars from Canada, and at a certain point, it won't make economic sense for Canada to build those cars. And we don't want steel from Canada because we're making our own steel, and we're having massive steel plants being built right now as we speak. We really don't want Canadian steel, and we don't want Canadian aluminum and various...
Carney must be like, what the fuck is this guy saying?
We, because of, past thinking of people, we have a tremendous deficit with Canada. In other words, they have a surplus with us. And there's no reason for us to be subsidizing Canada. Canada's a place that will have to be able to take care of itself economically. I assume they can. I will tell you that Trudeau, when I spoke to him, I used to call him Governor Trudeau. I think that probably didn't help his election. But when I spoke to him, I said, so why are we taking your cars? Why are we taking your, we want to make them ourselves. I mean, I said, and if the price of your cars went up, or if we put a tariff on your cars of 25%, what would that mean to you? He said, that would mean the end of Canada. He actually said that to me. And I said, that's a strange answer, but I understand his answer. But
this is reminding me of Ukraine, White House meeting.
Subsidizing Canada to the tune of
You know, his handlers are like, just stay on script, boss. Just don't insult them. The guy's out back pulling his hair out.
We always will, but you know, it's not fair. But why are we subsidizing Canada $200 billion a year, or whatever the number might be? It's a very substantial number. And it's hard for the American taxpayer to say, gee whiz, we love doing that. Thank you very much. We're going to have a very...
They cut his ass off.
Okay, there you go. That
Oh yeah, they cut you off, bro. There's a handler out there somewhere going, nope.
the president. It went
Carney looks like his face is about to melt off.
longer than we expected. A couple of important moments, I would say, in there, and I'll bring in.
Oh God. I don't even know what to say. Comment on all of that. I'm just not going to comment. I think it's better not to. Yeah, definitely. Definitely. There was a Bluetooth in the air going, no more, no more. Like, can you imagine being Canadian just listening to the end of that? You'd be like, fuck that guy. Like, right or wrong, I don't care. Just if you're Canadian, you're like, that guy can eat a bag of dicks. Like, God. Why can't they do this shit behind closed doors? Like, why does it have to be in public? Like, the public spectacle of it. And I'm assuming here, from what I could hear there, it seemed like that was the attempt to quell markets. that wasn't it. That wasn't it. Okay, boss. All I want you to do is just quell markets. just go out, do another presser, have Cardi over. You guys can say you're working on things. You know, no decisions yet. Just don't disparage them publicly on the microphone. Whatever you do, just don't humiliate them on public. What if I didn't say I couldn't humiliate Trudeau? I know. He can't help himself. You could see that he's like, I don't have any words. I just spout memes all day long. So that's all I've got. The only ammunition I have is what did he call fucking the fucking governor of California? I don't even know what he used, but he said some shit. Then he called Trudeau the governor. I was like, oh my God. Like, I mean, even if you are for this stuff, it's like, God. I'm actually, like, a lot of this stuff, I'm like, theoretically, I'm like, yeah, some of this makes sense. Just not like this. Like, you know what I mean? What'd you do to my boy? Yeah, new scum. You know, Gavin New Scum. It's like, what? Like, that's the governor of a state. Like, God. You're like in this White House with heads of state, like decorum. God, I don't want to comment on this too much because fucking nothing. There we go. Close that fucking gap. That didn't work, did it? The fucking. Can you imagine being the handler? Like, okay, I got the script for you, boss. Just don't say these things. Raining down now to close that gap on the downside. That's like nightmare fuel. I don't know if I can get through this for 4 years. I don't know if I can. I just wanted to recorded videos at nighttime. Tell you what happened the day before. It doesn't really matter, does it? Well, here, let's look at it together. We'll look at it. We'll do something because we got a big day tomorrow, right? Give me a second here. So, I mean, the idea here is that they're trying to rope us in into tomorrow. There is some danger here. Let's look at it together. For end of day, we'll get ready for it. It's already 12:45. It's a fucking stuff of nightmare fuel. Let's go over this as a group. We'll make this public. Seeing as we're heading into FOMC tomorrow. Now, let's talk about a few things here. Well, let's go back to the original conversation I was having while we're squeezing. This is the weekly trigger here. I mean, this is it. This is the point. You can see why we're so focused on this, right? We're here. We did not reject. We got above it. We got above it again, but we failed that tick. I don't like this tick failure here. I know you got. I get caught up on this stuff because, mostly because of algorithms, right? And these inflection points, they really matter. Do we get the new low? Do we get the new high? What's the result if we don't get the new low? It's new lows, isn't it? We start going lower to see where the real demand is and where real support is. We already knew coming into this week on Friday to sell. Excuse me. Let's go over here. Here's Friday close. So we already knew to take the winnings and run, right, on Friday. But we were looking for a little bit more life. Not predicting that we'd get more life, but you're looking for it, right? Do we at least get the new high? And not really caring if we close the gap down here for today with a new low. No real care here. It's more the will of buyers. Are the buyers still here, even if they are risk off into this event? Is there still like a push to go higher? And we saw more risk off behavior yesterday, didn't we? So this wasn't a good sign. And we know that we'd get a new low, or we would think that we'd get a new low today, regardless of what this was. And we knew that we would likely give up the Friday low, which is right here, which we kind of did, but more so did today. And then we'd give up Friday low, or Thursday low, excuse me. And this is important. I want you to think about Thursday. So we got Friday, right? And then we got Thursday right here. Here's 1600 on, here's right here. So here's Thursday, right? Make these bigger. These are all important. And why are these important? Because we sold, didn't we? If we sold, who's still here? Are they still here? Make this a little bit bigger here. Are these buyers still here even if we're not here? And if they're not here, how deep can we go? We know that Wednesday buyers are right here, right? This is the Wednesday low, right? I mean, we blasted all the way down on Wednesday. Remember, we stepped into the market and said we're going up. And why did we think we were going up here? Do you guys remember when we blasted down? You guys have hindsight trading. Why did we say we're going up here? For two reasons. One, we know that velocity on the daily basis is strong. It should hold. And number two, if not up to the weekly trigger, the only way from there is down, isn't there? The only way here is down in a major way. So you buy the dip until it fails, don't you? So the question becomes, where are these buyers? Currently, they're holding this low here from Thursday at 6 p.m. at 4 p.m., right? Currently, they're holding this. Let's just look at this together as a group. You can see that they're holding this, right? So they've bought this, haven't they? And what else can we tell here? We can also tell that we just had a liquidity grab, didn't we? Look at that big sell right there, right? Pretty big fucking sell. You see that? That's not good, is it? Pretty big sell right there, that big red box telling you these buyers up here came down. They're right here now. And they're down here because of why? Because we've got volatility, don't we? We've got an FOMC meeting on Wednesday. We've got some data on Thursday, but more importantly, we've got FOMC members, talking heads all day Friday. Why? We're also looking to see, do they front run? We missed the high back here. And are they front running this FOMC? And that doesn't look like it, does it? There's another question or point here, which is this a corrective move? 1, 2, and 3, and done, so that we can start the next trade higher. As long as we hold this, it's possible. We could go what? 1 up here, right? 2, back test these sellers. 3, right? Off and running. And 4, 5, right? 1, 2, 3, 4, 5. Off and running. If this is not, though, if this is only 1, 2, and 3, and if we break below this Thursday low, then this isn't right, is it? Becomes what? 1, 2, 3. Probably a bloodbath, right? 4 and then 5 to the downside, and we take out that Wednesday low, don't we? The greater problem with this is that we wind up introducing 2 outcomes. 1, 2, 3, right? Well, maybe not. It's 4, right? And then it's down here. And this brings out the question of, are we going higher or not? And they're pushing this issue, aren't they? If we get underneath that daily trigger and we try to go higher, 1, 2, 3, these same sellers are here, back under for a new low. That's 1, 2, 3, 4, 5, right? Things could get ugly, couldn't it? So lots of questions. If this, then that. If that, then this. Lots of questions here. And I don't like that we're setting this up. I don't like that we're not front running this FOMC. Is there something that we don't know? Big questions, right? And if we even come down here, one of the positives would be that this daily trigger is strong. We know it over here. So is it just a matter of going 1, 2, 3, 4, and 5? And then we're what? Big giant squeeze, wouldn't it? Or at least to right here. And at least break above that, wouldn't you? 2. Off and running. 1, 2, 3, 4, 5. Off and running, right? So do we want to, whoop, hold on here. So the setup right now, and as of yesterday's failure for a new high, is this is our first target. We hit it. And if we're not done going down and they're setting us up for tomorrow, there are traders out there for sure telling you the door is closed. We closed it yesterday, and we're going to set ourselves up for this downside move. For doom. So we would have two targets down below, wouldn't we? We'd have a target down here. We'd have another target down here. For doom, right? If we are able to putter around here, right? Just putting around, and then you get Jerome Powell Superhawk, which he isn't normally. But if we did, you break below here and you finish the week out over there, don't you? That's not good, is it? That's the baddie right there. Because that tells you that no matter what happens up here, we're going back down. Now, we're not in this trade as of yet. We're not in this trade, at least. Trade doesn't matter. This trade matters, though, doesn't it? This is concerning, isn't it? Now, we're not there yet. We haven't broken below. We're still in the island. We're still in the volcanic shit island. What do we call this? Poop Island? Still in Poop Island. Still hasn't been a break to go down. Poop Island is still, and as a matter of fact, Poop Island is probably larger. Could probably even call this Poop Island here. As long as Poop Island holds, thesis is still intact to go higher. This is still just a corrective move. Even if we putt around here, it's still a corrective move. It's all part of one move. But it does raise the question, doesn't it? Not having a command of the weekly trigger is not good. Not having the high, another high, right? Kind of like grinding up and away from Poop Island into a new Poop Island. That's not happening. So I would say we are risk off into tomorrow without a doubt. Risk off into tomorrow without a doubt. We're definitely not risk on and breaking off of Poop Island. You'd be looking for dips to buy down below over here. We would really need to see the break below in rejection, right? Turn this into a red bar or even a yellow bar. But this isn't good, is it? This is risk-off behavior, isn't it? You can see the big red box right here. Trying to tell you you cannot escape until volatility is passed. Right? And there's traders out there that even if we stay on Poop Island, even if we blast down tomorrow for a wick to build that candle for escape, and who would that be that wants that low? It's probably the COTs, CTAs, LNOs, vol control funds. We know this is strong down below here. So if you wanted the best possible price, theoretically, you could go down here, dribble down, do one shot just to grab some liquidity. So if you had a moment where you said, if we had the best possible price to escape, efficient markets, right? probably down here, right? Buy the dip. If you really wanted it, use call lot down here. You erase this entire move. This is only 3 days. Wednesday, Thursday, Friday, Wednesday, Thursday, and Friday. It's only 3 days. Not that much. We've been known to move. If you look on VIX 9-day, VIX 9-day wants to fuck, doesn't it? This is VIX 9-day right now. VIX 9-day looks like it wants to party, doesn't it? At the money SPX volatility. This right here is May 30th. You know what we did on May 30th, right? We blooded, didn't we? That was the day of the bloodbath. That was the day of this. Like, wake up, straight down. So I think that's the plan here, right? Park us in here. Maybe even down here. Even if you ricochet to the upside. So there's a trade playing out right now. And there's risk here into this FOMC and Friday. And there's a bigger question here, which is OPEX and VIXpiration. Do we flip the book on VIXpiration and OPEX, and instead of breaking out and away into the 16th before selling down, that we actually go to the downside? And we might actually get more blood on VIXpiration before we go higher after April or after June 1st. First week of June, we don't escape until June 1st, even if we do escape from June 1st. In the time, as time passes, you know, you start getting a roll here in the daily trigger. There's a setup for doom. That door is not there yet. We're not there yet trading that, but you have to be aware of it. So if the thesis is up and away, do we get this downside move, or is it just a chance to suck in bears to go higher? Because this is the trade they're telling us is here, right? Let's take a look here at velocity. And there's some positiveness going on. On a 30-minute basis, we have a higher low in Velo. That can't be seen on a chart. Daily velocity looks great. Like we're about to turn positive and rip some faces off. Weekly velocity looks good. I'm not going to show you that right now, but that looks good. So Velo tells you, no, this is a bear trap. That's what it's telling you. There's likely a lot of traders out here right now in this audience that wants to see that down move. Or they've already said that's what the down move is going to be. So these traders are telling you, nope, it's going to be 1, 2, 3, 4, and 5. That's what they're telling you. 1, 2, 3, 4, 5. And Friday, I disagree with that trade. I don't think that trade is still viable, even though we have the lower high over here. We're still again on Poop Island. And even if we did slip down there, it's going to be straight back up. Hourly velocity says so. And this daily velocity is rising. So even if you just put one more day up here, we know that this is going to hold. Or we assume this is going to hold. So there's probably a bear trap in here between today and tomorrow. And you're likely, in my estimation at least, unless we get super hawk J-Pow, this is a no-go, and that is a no-go. In that best case scenario, you might get a quick wick and just an opportunity to buy the dip. Opportunity for these professionals to catch a better price. If retailers are getting out and everyone else is stepping in, they don't want to buy the top, do they? They want to buy underneath, right? So we can be open to this lower trade, but only briefly. Everybody's loading up bearish on that wick here. Let's close all this out really quick. Sellers remain on the upside here. And we're going to look on a monthly basis. And look at them. They're down here, 530. That's their target, bear's target. We got a big wick here. This is a month basis, right? You got the wick here. Wick here. There is something interesting of note. We had the wick here, and then we have a higher wick. That's good to see. This month was higher than last month by a C here. What is not good to see is what? This line right here, right? The big fat red line. Buyers telling you shall not pass until volatility passes. Telling you, fuck you, no, this is where we are. You ain't going nowhere. This is the group of people that are trying to close the door on bulls somewhat permanently. So if you're looking for an escape path for the market, it's above 575 on SPY. 575, 574.02. 574.02. If you are a bull, you are looking for that trade above to go higher. If you're a bear, you're claiming it's here, but it could be way lower, couldn't it? Look at that. On a monthly basis, just look at this. On a monthly basis, bear's telling you it's lower. Like, buy this, bro. You want it cheaper. All right, let's just look at this for a minute. You've got 574.02, and you've got 529. You've got this candle right here, wherever that goes. And that candle right here. So where does this candle go? Does this candle like, is this what that candle looks like? Or does this candle look like this? Low, major low, tick higher on this month so far. Does it go down and ricochet? Does this become the buyers? $552.99. I bet you Poop Island's up here. I bet you if I snap a line right now, and you look at Poop Island, right here, isn't it? There's your Wednesday low right here. Here's your daily trigger. Poop Island telling you no. This is the 2 months ago prior low. We want to build a candle off this for the month, don't we? Right where Poop Island is. It's all bullish. Go back and look again. So wick damage, body. A little bit of wicking down below here. We didn't take the whole wick though. That would be bullish, wouldn't it? You got the low right here, body. You got the damage done down below with just mostly a wick on last month. So you kind of want to hold this up, don't you? This is a big, big, big. Which way are we going? Higher, right? Daily trigger saying higher. Daily trigger swinging underneath to pick us up, to give us that big, big, big push, right? What do you think these sellers are right here? I don't think these are dealers wanting to unwind, wanting to stop and unwind. This is where the trapped sellers are, isn't it? Trapped buyers over here. That's what these guys got to be. I bet you that monthly bar at 574, almost guaranteed. Those are panic sellers up there. What else we have up here? This isn't bullish. But this part isn't bullish. There's monthly. There's weekly. These fuckers here, you know what these are. These are the bulls that lie to us. And we need a reason to escape this, don't we? We need like a tone it down from Trump. We need some easing from Jerome. We need some deals or a blanket tariff statement. We need China to know what the actual demands are. We need less fighting. We don't want any tit-for-tat escalation in warfare, economic or otherwise. That's what all this represents right here. Big red weekly and monthly resistance here. We already do the weekly? I think so. This might bring it into better relief here for you, too. So we need to see these things, right? Want to see this so that even if we come back down, we break higher, right? This would send the market reeling, wouldn't it? You X out these sellers, that means that trapped sellers are no longer scared. They're worn out. Economic conditions have changed. This is a big move here. This means a lot. I call it the can't stop, won't stop trade. Like you must do the can't stop, won't stop to escape. You need something. We need a relief valve. And if we don't get the relief valve, we get the bullshit like we just got, the way is going to be lower. Or the way is lower, buying time until someone gives in, right? It looked like they were attempting today. There was an attempt, acknowledgement. Try to stop this from happening. Even though it was a fucking poor attempt. It was a disaster. They're doing damage control right now. You know that, right? Guaranteed. Look at this disparity here, too. Zone to zone. But we're still sitting on Poop Island, aren't we? And look at us. Poop Island. Hey, Poop Island, what do you got going on here? You need some help to break above. You need the daily trigger to help you out. That's good to see. That's good to see. Daily pickup. Four hours still trying to keep us locked in, isn't it? We took this one out here. We got to fight this, don't we? That wick. Brutal, huh? That wick was a liquidity grab to send us lower. Two groups of sellers, one here, one here. Getting aggressive with it. To what end? This is the close today. We know that SPY or SPX SPY at the money volatility is expected to ramp Wednesday, 2 p.m. We can see that the sellers came back in with force, right? Sell. Sell. And they just came in again, didn't they? Sell, right? See the big old wick right there, dropping bombs. We're not going to be able to get out until what happens? We pass volatility, right? We're not seeing that. Didn't see that high up here, not holding right here. We're underneath. I'd say to you this. Let's say if you're not bearish here, this actually holds for this too. I would say that we're locked in down here. And that even if we squeeze up here, two p.m. So it'd still be one trade here. I don't even think you could count that as one. That's 1, 2, 3. This is a part of one trade. If you could even call it that. Expectations, I think. That's expectations right there. Need volatility to pass. This is 2 p.m. tomorrow. If we get a decent Jerome, not hawkish Jerome, you'd break through this one here, then you'd break through this one into the weekend. These doors don't close yet. I would change my opinion because of that low up there and because we're not parked up here. And we did get this big candle, this big wick right here. I would say that we're like tied into this close. We could even trade down here tomorrow. They fade us right into Jerome. Just a big old grind down here. At some point they let off if they can get us down here by open, I would say we're done. We can move this over, but in giving it till 2 p.m. time or price, one or the other. And there's not a lot of time to get it done either. So if we don't expect super hawk Jerome, and if I was a seller, I would want to get this done, which would be what? Front-running volatility, right? To break into the close, overnight blasting it down, doom and gloom, sideways and up and away. Maybe one more retest down here. Then we're out of there, or at least on a smaller basis, instead of this 1 hour time frame. Let's look at this more closely into the close. Pretty much what I had already plotted out was this after the loss yesterday of when we lost the this is unknown how high we would go, but still this like one more roll to the downside. Now they don't have a lot of time to do this in my view. They have enough time to to retest it at 2 p.m. But the one thing that bears have against them here is the daily trigger. So you can see it's right here. So time's running out for bears too, for sellers. Like they got to get this done as quickly as possible. And they would have to get down here as early as possible in case we got bad Jerome. You could slip underneath it. And then the only way you're slipping underneath this is with like Super Hawk Jerome. The only way. This holds. This holds no matter in every outcome unless you get like you need like you need Jerome to pretty much need Jerome to be Super Hawk. You need Trump to fuck up some more. And you'd probably the last part, the nail in the coffin would be some bullshit from China and Russia over the weekend, sprinkle in Carney in Canada. That's how you get the downside move. But I don't think Trump helped today the way that he probably wanted to. And I don't know. There is a little bit of doom with Jerome tomorrow. You're likely not getting a cut. Likely. You could. This market would go vertical. But I don't think you get... there's no need to cut right now. We haven't super ramped inflation yet. So he doesn't... I don't think he does anything. And the only negative that I see in tomorrow is QT. QT is a weird thing. Like, it's not weird. It's just when you're doing a ton of QT, like if you have to tighten like this much here, let's say you're like throwing the fucking book at it. You're just like, max QT. If you're slowing QT down here, you're like knocking all this off. When you're down here, just a little bit of QT has more effect than a lot of QT up high. I don't know if I'm explaining that right. But less QT is sometimes felt more, it's more negatively. He's likely going to discuss the slowing of QT tomorrow. That could be knee-jerk good. But then again, if he talks about why we're slowing it because of the impact of it, that would be bad. The consumer is well off. He's going to talk positively about that. He's going to say that the consumer has been resilient. You're going to hear that. We have a resilient consumer still. Lots of unknowns. I looked through all the data. I like dug deep into it. As a matter of fact, there was a writer yesterday. I commented on one of her stories. She didn't post it, but I read her story yesterday, and she got most of it down. She got most of it right and correct. She wasn't selling sizzle. She left some shit out, but other than that, she got it right. The consumer is still well off. The consumer is still resilient here. The consumer is not where you think they are, or where a lot of you are being told that they are. They're still doing very well right now. So I don't think you get a cut tomorrow. Not a lot of time here for. So this we talked in a brief I wrote to you. I said front running volatility. Called it. Is it front? The brief was: is it front running volatility or is it like a trap for something unknown? It's one or the other. So as a seller, theoretically you don't have a lot of time as a seller here. Let's look at this closer. We are underneath the hourly trigger and the half an hour trigger down here. Here's your daily candle again. We had that up earlier. This is brutal right here. This liquidity grab is brutal. You know, I don't think we're breaking out of this unless we have news. And we have the expectation of volatility ramping tomorrow. SPX at the money vol, it's near vertical right now. It's tomorrow. It does blow off, but things can change, of course. Vol curves are, you know, they're not quite toilet paper, but they're valuable till you get into an event. It like predicts the event coming, but once that event happens, you know, it's anybody's fucking game. That's not good, man. Those Christmas colors aren't good, are they? Telling you the way is down, isn't it? Look at this really quick on a half-hour basis. You can see them. They're still up there. $15-minute basis. Let's look at the half again. That's just downward pressure now. It's ripe for a squeeze. It really is. It's ripe for a squeeze, but we need a trigger for it. It's more just stretching price right now. And I want you to look at this on this base. See this 15 minutes right here? That's nasty. This is called I believe it's called a tweezer pattern, or I think it's called a tweezer pattern. Not good. This is a rejection. Likely wants more down before going higher. So we're stuck in this range. You see it? See the range? Up, down, up, right? Until we can get out of it. So here you go. Predictions for tomorrow. Predictions here for tomorrow. Don't be a buyer unless we break out. So you can see this downtrend we're in. See this downtrend that we're in. Stay, you know, on the edges like we were this morning, right? Remember this from this morning? I had this charted out for you. You can be a buyer inside of here. But you stay inside of this, as long as we're in here, the way is lower, right? Does that make sense? If we break below this, we'll start thinking about some major downside. Until then, oh, there we go. We're already going. There we go. Come on down. We're already coming back to the downside over here. We know we're headed this way, right? Now, there is some information here, too. If we start heading down here into this close, you know, if we're in a low volume environment, there's a hedge fund or something that wants to sneak us down here. Called fake futures, right? It's not real. Nobody really selling this. A few contracts being traded between two people. Expectation into the close here. Expectation of the close, targeting 557.30. Now, I do want to say too, we have AMD earnings after the bell. That could lift us up in here. You know, if we get a good AMD report, we'll take a peek at that here in just a minute. And that leaves the room for AMD between 4 and 415. They can get us down here into this close. There might be there's a good short trade here into the close here, and maybe we can catch an AMD trade up here. We'll take a look at AMD. I thought they looked kind of bullish, but I'll have to look again. We'll check them right now. So if you want to look at this closer. There's something else to talk about here too. Just, I think I talked about it earlier, but this is 2 p.m. So you like fade this bullshit down here, right? Maybe you get the AMD up middle of the night, futures selling futures, right? Come back into cash market at 9 a.m. We're back up again, right? So you get like all this move here for futures. Cash market SPY is different. But then we like fade this, and maybe we get the, you get the up move here into Jerome Powell, and they blast us straight down for more liquidity. Just a matter of function to like up, down bullshit to escape to the upside. Only if we get bad Jerome or hawkish Jerome would I be scared about the downside move. There also is some potential for that vol with Jerome. Like seeing this coming up here. Let's see a little wicking down here into tomorrow. I don't see the Jerome like do it. I mean, I see some of it. Like today with Trump, that was a fucking disaster. I'm sorry, I don't care what your take on Jerome or on Trump is, but that was a fucking full-on disaster. That did not work. It wasn't negative in context, even though it was negative. But I don't think Trump knows how to fucking, I don't think Trump's, even when he tries, he kind of sucks. God. Down in there tomorrow. Watch out, there's still bullshit in here too, like. There is some like, there's a lot of like noise in here. Like come down here, AMD is good. Yeah, we get it. Like there really is. There's like doom, good AMD, bad for futures, then cash market up here. Send us back down for the volatility for, the bullshit with Jerome. Like a lot of nonsense, right? Nonsense. A lot of traffic, a lot of noise. We'll take a quick look here at that's why spreads are your friend, by the way. There's a lot of noise in here. You guys are all short right now. You guys are all like, yeah, kill it with fire cap. Bears are all stoked right now. Hold on here. Hang tight for a minute. There we go. It's very busy. I was looking at it last night, and then I was looking at it this morning. Like I wrote like a long ass brief last night. Then I got back up at 5 a.m. and wrote it a second time. Took me 3 hours. So I'm like, I don't even know what to tell these guys. It's gonna be a hot mess for the next 2 days. Like up, down, zigzag, bouncing around. I would leave you with the overall thesis here is higher once volatility passes, unless we get bad news. Don't look at any of this price action here as, oh my God, we're going to the moon. Some of you guys were freaking out earlier with the squeeze. I think there's like two or three things to keep in mind here. One is that overall macro idea that the weekly trigger is a massive inflection point. Even if we squeeze above it and come back down and check it, even if we reject it, it's a big, big implication for the whole year. Yesterday, I made a post on Twitter saying that Wells Fargo analyst's outlook for 7,000, it's not closed yet. It can be closed, but the door is, it's still open a little bit. That you should always keep that in mind. It's important to be open to other outcomes, especially if the door has not closed on it. And then the door to just squeezing and rejecting 58, 5,900, to blast down for a second leg down, major recession trade, and even be open here for we're going to do the recession depression trade, not recession, a major recession depression trade right at the weekly trigger. And I would even be open to the other outcome of we're going to go down, fuck around, and go sideways, waiting on Trump. There's some punitiveness in this. If we're not going to do the second jackknife leg down for the major recession depression, keeping us sideways here punitively is also another outcome where we don't price in like that doom trade, but the market just literally trades sideways and says, fuck you. Like not fuck you, but like fuck the people that are in charge of all this nonsense. It is nonsense. I can't get past it. I don't think it matters what your take on this is. I think everybody can agree it's all fucking nonsense. Like there's no plan. We're negotiating in public in an Oval Office. We don't have scripts that we're speaking off of. We don't have normal negotiations. You name it. It's all a fucking mess. It's a mess everywhere. There's nowhere I can look right now and see any semblance of normalcy. Bessant's trying to hold shit together. You can see it. Even yesterday when he called out, or over the weekend when he called out the movie thing, Bessant was like, I'm on it. Like, almost like not like a lackey or something. I don't know if it's lackey, but he was acknowledging that he heard it and that he was going to work on it. And that was freaking me out just hearing that. Going off the cuff like that publicly without thinking through the ramifications, especially if something that, and then like reports that it was John Voight that told him that, like some fucking rando fucking Hollywood guy. I'm not really angry at like Voight saying that. I'm more angry that Trump didn't take it under advisement and then have it researched by smart fucking people, that vets what some fucking Hollywood guy says. Like, I'm not discounting what Voight says either. It's more, if you're entertaining that, that's okay. Just vet it through smart people, the people that actually do the shit in the background. Even if you're persistent, if you're like, I still want this to happen, find a way to make it happen. But just like throwing it out there like a bomb is brutal. And even his words today are all over the place. Like, I think Trump was quoted today or yesterday saying something like, I'll do whatever the movie industry wants to do. It's like, dude, like, just keep that shit private. So I think this speaks to that. This price action speaks to it. I think the whole fucking thing speaks to it. Not all whole thing. Part of it does, and part of it is because of where we are. So anyways, there's some punitiveness to some of this until we can get less uncertainty. Anyways, looking into the close here today, downside price target 556.06. It's way down here. This is 230. Yeah, we still got plenty of time here to get down there too. We'll likely sell the fuck out of this close. Fair chance of it. Unless we hear some shit. I mean, this shit can change in a moment's notice on a dime. The market is looking for a reason to squeeze. You saw it today with Trump. Well, you saw it first with Bessant. That Bessant thing was a nothing burger. Trump's Oval Office today, you could see that Oval Office was packed with reporters, and that Oval Office had a million questions. And you saw the market squeeze there for a minute. The market, the public, Wall Street, the news, everyone is looking for a reason for the market to go higher. U.S. exceptionalism, U.S. I don't know. It's not just exceptionalism. There's like perpetual optimism in the U.S. This is one of the rarest times that I've seen in my lifetime where I've seen things like this, but not publicly. I've never seen something like this in my life where it's so public. And Jerome spoke somewhat to this. We haven't encountered this in modern history, not since the 1930s, and that's just policy. But the rest of it, like the uncertainty, I don't know that I've ever seen this, ever. I remember Reagan to some extent, but he was more like positive in his approach to this stuff. I want to say like Obama and Clinton too, to some extent. Like even like Gore, I think Gore cut 400,000 jobs, 400,000, and it wasn't done like this. So I think this in particular, we're paying for this right now, and partially, not fully, but partially. So into the close downside, I would expect that downside move. That price target into the close is somewhere down in here. It's like 550. What is it down there? 5612 or something? 556, 20, 31, and 555.82, somewhere down in here. Want to see where it is? Where we're headed? Right down in there. Okay. We could see some buy side at 3.2 or 3.50. There could be some spiking going on because of who are the buyers right now. All right, so we got to look at earnings for today. A few earnings here. And I have some programming notes for you I need to let you know about before we go any further. I told you that I had I don't know what I actually told you or not. Some of you might know this, some of you may not. I have a family member who is a direct family member that is near end of life, and I have to fly out to do some legal stuff. Trying to like not be that specific, but on air. I have to fly out and do some legal stuff over the weekend. I have to do some traveling either Thursday or Friday to come back for Monday or Tuesday for this stuff. The stream will still be up each day. You'll get heavier market briefs, and I'll be in the Discord trading with you major supports and resistances and all that kind of stuff. And I believe on Friday I'll be on stream, and I believe on Monday I'll be on stream as well. But I just want you to know there'll be no disruption, but you need to know that I'm doing some traveling into the weekend and the start of next week, unexpectedly, for some law stuff related to end of life stuff from my parents, one of my parents. Okay, so what else do we have going on here? Today we've got AMD at the close. We've got Rivian at the close, I believe. Did Rivian already report? I don't know. We've got AMD. I know. Let me just check a different earnings calendar here. Make sure I got this right. Hang tight here. If you're looking for a market boost here, maybe. I've got some traveling I got to do this weekend, and I don't have my I don't even have my tickets yet. I went looking for tickets. I'm like, oh my god. Like buying airline tickets right now is not what you want to be doing like a week out, 3 days out. My face is about to melt off about this. So we've got Super Micro after the bell. We've got AMD after the bell. Rivian after the bell. Got some other this whole week is like filled with they're not quite memes, but they're retail favorite stocks. I mean, we got like Super Micro, AMD, Rivian, Tempest, Arista, Win, Lucid, Astral Labs. UPST. In the morning, we get Uber, Disney. So if you're looking for that, like pickup tomorrow, like if you're looking for like that, think of it like this into the close today. You're looking for that like little pick me up into the bell here. And tomorrow's open. Maybe some of these reports can help with that. You've got so tomorrow in the morning you got Uber and Disney, and then you got a whole bunch of other crap. Unity, not crap, but retail favorite shit. You got Barrick Gold, and then tomorrow after the close you get AppLovin, Carvana, ARM, DoorDash, Oxy, Dutch Brothers, and then on Thursday before the bell we get Peloton, the bane of my existence. Shopify is a big one on Thursday before the bell. We've got, and of course, Shopify, you want to check their guide because they're going to be like Shopify is massive China goods. Massive. And then you've got DraftKings on the close on Thursday, Affirm, Wolfspeed, TerraWolf, baby, on Friday before the open. A whole bunch of retail stuff in here. And there's others, too, that are not on this calendar. That other calendar I have listed a whole bunch of other retail favorites. So, okay, let's take a look at a few of these tickers after the bell here. We're going to look at Super Micro. And this is VIX 9-day here. Look at how bullish this VIX 9-day is right now. It wants to fucking crank. Like, just look at this. Like VIX 9-day is ready to rock. It does not look bullish here. You know what does look bullish though is HYG. HYG looks like it wants to like pull back and close the gap at 77.57, but it wants to moon. HYG wants to go party. Saying up on the stock market after we're done with this bullshit. First stock we're going to look at is Super Micro SMCI. I like SMCI. Overall, I like it where it's at. I like its price. I like SMCI on their earnings today, too. I'm bullish on their earnings. Buyers of the dip keep stepping in SMCI. They did have a major low on in October. I'm assuming this was an ER. October 30th, 2024, they blasted down. Traded $17. There is some negativity here on SMCI. You know, price is in the bear market, and monthly trigger is rolling down, but it's being accumulated. Just look at this again here. It's being accumulated, but I think it's more for squeezing than... And they got a bunch of gaps lower too. They have Gap City down here at like $2, $3. It's not. I was saying it's wanting to be accumulated. I don't know if I'd go that far. On higher time frames, it is not being accumulated. It's just kind of flat and negative. They had a low here of $17. I do think it's going to go down and trade like $1. 2, 3, 4, 5, 6, 12. So I can't say that a SMCI is bullish in the way that you think it is. Hold on here. A little bit of turnaround going on here. Let's look at SPX really quick and see if we're just tied in right now. Yeah, we're sitting on 5,600 right now. They really want this fucking low, huh? I'm looking at SPX Gamma right now. Now, I want to also make a note to you guys. Let me just talk to you guys about something really quick before you continue on with this SMCI. So just note that, so here's SPX Gamma. This is where the sellers are trying to, you know, just grab that liquidity down here. But also note that there's a whole nother side to this trade. We're kind of magneted in right now. Or there's a magnet on SPY right now. But I want you to, if you can do this at home or something, this is our range right here. So we are closer to turning up than we are to turning down. And this will become, we will trade this, in my view, at least. We will trade this unless we start breaking down this support. We are headed up that way. So just note that. Here's our range right here. This is what they want to get. They want to get this little, they want to get this liquidity and get that grab so we can head higher. If you want to snip that, you can. I don't know if you can call that bearish or not, but at any rate. The reason I'm saying that is because of this. The reason I'm saying that is because of this fucking 1-date zero. There's 1-date options for 7250, and I'm looking at this SMCI, And let's look at this really closely here. Like everything says it's good here. Let me just check their expected move. Hold on here. It was like this, like it just hold on here. Give me one quick second, guys. Just want to check this against the reports that we have. That fucking thing. And I don't know if they're going to be able to get this. We are closer to churning up than we are down. Oh, sorry about that. Okay. SMCI. Look at how bumpy this shit is. Like, how do you even call that right there? Is that just one move? 1, 2, 3? Is that even a move? Is this just a flat correction here? Let's just squeeze in. Call these like false wicks. It's like a flat correction here. I don't know. These fucking memes are not easy. Just know we're getting a little bit of buy action on SPY right now. The expected move after the bell for SMCI, or expected move for Friday, is 5.4%. So not a big move expected. After the bell, this might be mispriced, SMCI. Like 5%, 5.73. Does anybody trade this stock anymore? I mean, it's only got a 5% expected move after the bell. There's SMCI. There's the daily trigger. It also has the 5% down move. Over the next month, it's got a 16% move expected. It's a big drop here. It did the halfback trade over here. This is the return of the scene of the crime trade. do this really quick again. It's got just nothing but gap to fill. You see this? Like gaps to fill above. SPY trying to squeeze right now. I want you to see this here. Look at this on a monthly basis. You got like demand, pounding, pound, demand, pound. They really want these new lows down here. Just looking at these candles here, this looks bearish. Like big one-time move up here, and then they want to leg this down. And there's gaps down here, tons of gaps. Well, not that far, but there's a bunch of gaps here on smaller frames. Is this company going to zero or what? Depends on who you're talking to, right? Big giant weekly fuck you candle there. Talk about glory days for SMCI. No more, huh? Bye-bye AI, bye-bye. Servers and chips, and there can only be one. And there's fraud. Gaps need filled down here. Watch out here. There's some buying going on in the market right now. There's little gaps down here. You see these? There's the gaps everywhere down here that need filled. Those gaps. I'll tell you this, the way is lower for SMCI overall, in my view. But it's very squeezable. $2. Three. Got a lot of pressure on it. This is starting to bottom here. It's attempting to bottom. SMCI stock falls ahead of Supermicro earnings today. What to expect? Eyes 40 billion in sales. Let me see. I got some news here for him. Jim Cramer dumps Supermicro Center. Not so super. Go with Dell. That's our boy there, Jimmy Cramer. This is a tough one because it's got a ton of reasons to sell. And I want to show you this here. This was the meteoric rise of SMCI. These sellers are coming down. So I think this is more of a process, though. This is big consolidation here. And you've already traded down half of this. You know, your thesis either has to be that we're going to start trading 16 to $1 something. You know, we want to get down here to trade all this, right? I don't know if this ER can do that quick. They already had that downside move right there. That's the halfback trade. Yeah, you know what they want to do. They can see what they want to do. They want to slam this thing down. And that looks right there. Look at this really close. Man, that looks like it wants to fucking break right out. Ooh. That's the big seller right there. You can see that one right there. That's where these fucks are teeing off. You can see it. This is the 7th. This is the 19th. This is an OPEX right here. It's the first week, right? So squeeze the first week after month. There's another OPEX. There's another end of month. Drop it down into the end of the month. See that grind? See this right here? It's this grind. And then the drop comes end of month. Comes off again. Same bullshit. Squeeze, ER, up, then down. I think we're headed lower on this one, but I think we're going lower, but I think it's from a higher place. And these sellers here, right here, there they go right there, and they're going to step in again. If you have a good ER, right? They're going to try to step in here at 36 and send you pack into the downside. I'm bullish on their ER. Just on a 30-minute basis here, this looks good for ER. Show you why I'm saying this. You've got daily accumulation, and you're at the bottom of your hourly velocity on a 30-minute basis. You're at your bottom here on your half an hour and your 15 minutes. So I do think you squeeze. But to what end? It's just another chance to grab liquidity. You have got a 15% or a 5% up move expected, which is right here. You did trade your half back over here. I want to see you fail somewhere in here. So I'd like to see like this upside move close this gap out. I do think you're given a little bit of, there's 1, 2, 3. There's one thing I would say to you on this, which would be it's only another opportunity to sell into your ass. Like overall, I'm bearish on this stock. I think it closed the rest of this stuff out here. And it goes down. The only thing I would say to you on this would be into the end of the month, they're going to try to like pin you in here and then dump you again. I don't think they're ready to dump you here, but I think they will. I think this thing trades around I think it trades around OpExes and beginning of month. So upside to go. You can see it right here. Here's the 28th. You can see the ramp up here. There's a ramp up here to the 16th. And there's another ramp up here. There's like some kind of like ramp, and then a dump, or a ramp here, I should say. Like a ramp up here, and then a dump coming up into the end of the month. It must have to do with shorting this fucking thing. Something up there, and then a major dump coming up. Something like that. And they're going to try to fucking send your ass packing down here. We'll start with that. Something like that. Bam, 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 bam. Whoop. Down, blood it. Bullish on SMCI. I'd really like to not see this dump right now. It could, but it should recover. If you catch a good dip down here, it is possible. It is possible of a delayed reaction. If you want to get long on this and aren't long already, if there's like a blood move on their ER, try to pick it up because you're going to get a nice trip higher here. Overall, though, bullish. SPY starting to squeeze now. Trading the half an hour trigger again. Trading 560.30. Bullish on SMCI. Next one we're going to do is AMD. AMD fighting its way higher right now. This is good to see. SPY now trading 560, trying to escape into 206. Remember, if we're bearish on a day, we're going to get the inverse move on the on SPY. We have a down day on SPY, so like 2:30 to 3 p.m. we should go up. The target on upside on SPY is 561.28. 561.28. There is a little bit of a bull plane. Look at AMD really quick. Advanced money destroyer. You know that this stock sucks, right? It's great stock. It's just a delayed reaction shit, right? Accumulation on a 30-minute basis. I don't like this hourly velocity here, the inverse of SMCI. I don't like seeing us going up and then down here. Makes me think they're gonna delay reaction you again on this one. I think we saw that yesterday too. There was some negativity. It looks like dog shit on monthly. It looks like dog shit on quarterly. On weekly, it looks good, and on daily, it looks good. But again, the hourly looks like shit. So this one in particular, inverse of SMCI. See that big dip down here? I'm betting here. I could be wrong, but I'm betting after the bell. You could possibly see this up move, but then this down move over here, like a fake out. If you see AMD run after the bell, just not looking at anything here, you get like the pump on AMD. Maybe you trade $108 at most, and they come right in on you again and just drill your ass down for options sake. And then you get a delayed move to the upside. I would look into, if this happens, I would look into like AMD calls on Friday. So like Tech Friday, 0 dates, if you don't know what those are. Like you can't trade 0 dates, of course, on AMD, so you trade them on a Friday when they expire. There could be a delayed reaction. This is, of course, on a daily chart, but you're getting the gist here, right? So let's go look on a monthly here. Let's take a peek. Their expected move on AMD today after the bell is not that much. On the 9th, on Friday, there's an expected 8% move on AMD. That's actually pretty big. And then it goes up to a 12% move. So, and then we've also got something else here. This AMD had a lot of buying going on here on its monthly. And that's good to see, but like this roll down then higher. On a day-to-day basis, you can see it right here, daily basis. Gaps to close higher. Bullish on their close, I think. But again, like there's a fake out in here. There's this bullshit you have to contend with down below. There could be a delayed reaction. And they have sellers above here on a daily basis trying to keep the stonk down. It's like something like this, then like this. God, look at these, and look at this shit, all this shit down here. Gaps. I'm kind of bearish on AMD. Mid to late term. There's no accumulation on this fucking stock right now on higher levels. Look at this in a week again. I like all this. This is all good. That's all good. Monthly trying to turn up. That's all good. I like all that. But the door is still shut on AMD here. Man, this whole fucking market, man. Like, this is a prime contender for why. The market needs a reason to go up. Until that reason shows itself, like this is a prime example. Market needs a reason to go higher. And if we don't get that reason to go higher, it wants to send us big time downside. Now, I do like this here. We're at $100 here. And I like the idea of the squeeze on AMD after the bell. I just don't know how long. I don't know if it's short-lived. We are in negative gamma right now, which is good for AMD, believe it or not. And look at this shit down here. If you see AMD close this gap, I'd buy it. Unless market conditions say no. If there's, like AMD will like to like blood your shit down here. If market conditions haven't changed negative, I would be a buyer down there. That's $88, $89, $90. If in any way they close this gap, I'd be down with that. If market conditions become favorable to bulls, it's going to make a huge run. And you got gaps up here to close. This is all good. For our basis. Fucking gaps, man. Hold on here. Go back to that daily. Goddamn gap fucking city down here. This is why everybody wants us to go lower. Boo's squeezing some more. Target upside. 561.26. There is a back test coming up on a 1 and 5 minute trigger. Man, and if any of you understand Advanced Money Destroyer, it's right here. Right fucking there. Delay your ass. It's bullish. I just don't know. You guys, some of you guys know full well what I'm talking about. I will say that it says it's going to squeeze after the close. I mean, you're underneath the daily trigger. The daily's strong as fuck. The hourly is strong as fuck. One, two, three, four. Oof. That's what that's calling for. A down move here. One, two, three. Oh, no. Nope. There it is right there. There it is right there. 2, 3. And I think I want to say it's right here, but we could easily fucking bloodbath and then higher. That 3 should be the biggest push. And then I don't know what this shit is over here. You never fucking trust this fucking ticker. Sucks. Ticker is like, how about we go to the end of the month here? 28th, 29th? Do it like this. That would make more sense. That way you get like that end of month bullshit. Scoop all that shit out, then up. And this last pump would be big. Be up here. Still delayed. So a little bit of pump here. Watch out for the sell down over here. Meet up with the monthly trigger. That fucker wants to crank. Might actually do better than the market in the end of the month. June, July, right there. Let's look at this in an hour. And pull this down here for this gap. Move this over. So here is on an hourly basis. Up here, down here, then up there. The old AMD fuckaroo. AMD after the bell, $102.5. And then the big fuck you trade down here. And then you get your after effect right here. There's your upper target. 106.80. And there's like some more nonsense over here. I can't tell if we're gonna blood your ass down here to close it. You got a bunch of fucking bullshit down here. You got gaps down there to close. I don't know if you close those or not, but then you got this upper target up here that's monster. Run away into June, July. Here's AMD. Bullish on their close. See what the percentage is here. 4.5%. 8% is the. I'm assuming that this 8% is down the road. Yep, there's your 8%. So yeah, bullish on AMD. The only thing I want to tell you here is this garbage down here. If you're so poisoned by AMD, you're either coming back for this now or you're coming back for way down here. But bullish on it right now. Next one, last one for the day here is Rivian. I think we've already done this one. We can look at Rivian really quick. My thesis on Rivian is you just buy it. Cool. I think I said this yesterday. Day before about Rivian. It's good to see this happening. There's an hour chart. Been talking about this for a few days. Any lows, just scoop it up. It's so fucking cheap. Not only that on Rivian, I'm not going to give an outlook on this one so much as to say you just scoop it up. I think it's worth scooping up. It's being accumulated down here. It's been fully annihilated. We are turning up here, but this is a process to turn up usually. This is like a process of accumulation. It could take months for any kind of real. You had the successful back test on SPY just now. Target to the upside remains the same, 561.28. Just note that like Rivian, I think it's a great like long-term hold. Sell puts underneath. You do have a series of higher lows, 1, 2, 3. That's all good to see. All great. Anytime you see price get down to $10, you pick it up. Sell puts below. On its daily basis here, there is an issue. I mean, it's being accumulated down here on a monthly basis. The only issue that I see here is the amount of work that it took for this accumulation. Daily is looking a little shitty right now too. On a 30-minute basis, it looks good on hourly, but it looks horrible on daily. Look at how bad this looks on daily. So I don't want to give you an outlook per se for like expectations as to where it goes. I would really like you to just, just snap a line on this thing over here. And every time you see this stock come down here, you just add. It's like Palantir, right? You just add. Matter of fact, I have a negative outlook on it. After the bell today, I have a negative outlook. We have a cross right here. See this daily trigger crossing? We tend to revisit these points of interest. There also is a gap above. Let me just check this really quick. And you have not traded the high yet. So I would like to see this be one move, like up, but then slam back down again. Check this, and then even come back down here to go higher. It's part of a bigger move. You still haven't taken, like you failed this high. So that means this high hasn't been taken out yet. You're trying again. So you get your high right here. You're a little long in the tooth. Recheck this. Bullshit low. And you're fighting this one here, and then you're fighting that one back over there. But at any rate, it doesn't really matter. What really matters about this stock is, I'm not going to give an outlook on this. I'm going to tell you that you'll probably go up here. 1, 2, 3, 4, 5. This could be a low too. But more importantly is any chances you get down here to get long, you just do. Sell puts. Their aftermarket or their expectation, Rivian. Big moves expected. And they look like they'll hit both their up and down side. In a month, they got a 15% move. That's 13% right there. And this is 15% right here. Matter of fact. You should probably hit both that side and this side. Probably get an upbeat outlook. Rivian, bullish, but would rather buy here. Bullish, but I don't care. It's down here is the buy. Okay, I think those are the three for today for earnings. I like Rivian as a company. I like Rivian like I like Tyson. I mean, I know some people are not going to like these stocks, but if we go into a recession, you guys are not today, but a few months down the road, you guys are going to be eating chicken nuggets. I'm going to be eating chicken nuggets. Like Tyson. What's the other one? There's like Tyson. I've got some alerts set on these already, but like, there's a few of these companies I've been watching closely, like Tyson, Ford, a few other tickers. I would put Rivian on that list. They're a good AI or not AI. They're good. They don't have any Elon. They're not surrounded by Elon, are they? They've been annihilated at this point. And if I was doing their guidance, I would be like, future is great. That's what I would be saying if I was Rivian. We don't know if we're going to survive. They seem like people like Rivian. So I'm bullish on them, but even so, I don't like the short-lived idea of Rivian. Like, oh, I'm gonna make $1.50 off Rivian for 20%. I'd rather like accumulate it at like $10, $11, $12, something like that. More accumulation, better. And I want you to think about this. I don't think that they're a Palantir, but they have dedicated people that love their company, and I think they still have a leg in the race to either go M&A. They'd be a great M&A candidate. I have family and friends that have jumped between Tesla and Rivian over the years. truly like bouncing back and forth. They're not a bad company. And I have one friend and family group where I've hang out and get together with them, and they like Rivian. They really truly do. Like they are believers in Rivian. Some have stayed working for Rivian even though Tesla pays more now. Do any of you guys like Rivian or no? I mean, I don't think they're like a Ford Lightning or Tesla in a lot of respects, even though Tesla's brand is damaged until Elon steps down, in my view. I'm anti-Elon ever again running Tesla. Not again. I've seen some companies be able to shed negative views of people, but the whole like Hitler thing, I got no time for that. I got no time for that shit. And I don't think most people do either. That was a no-go for me. You can spin it any way you want. They still got the video out there. I think that's it's like, you know, you get like what do they call it when you get I forget when they end your career forever and ever and ever, no matter what. I forget what it's called, like Kevin Spacey kind of shit. You just never ever recover from that stuff. I guess Mel Gibson did, right? He recovered. How long did it take though? Like, look at Mel Gibson. Like, the best part of the end of his career was gone. He's had some good movies since then, and people will view his movies, but that shit took years, like 5-10 years, to try to like fix your reputation and stuff. So I'm not saying that Elon's gone forever either, but that's a tough one for me to swallow. And like, I think if he did like the Amazon Bezos thing, that might work, or could work. Or maybe he just gets bailed out and the company like survives. But I think like the days of Elon and that magic is gone. I don't think that's ever recoverable again. Ever. Yeah, I don't see that being recovered. Not in that way. That, remember that magic? That magic is gone. Like the childhood innocence of a company, that's gone. Forever. Rivian hasn't lost that, and I don't know if Rivian succeeds, but they would be a company that I'm sure would want to be absorbed, or some kind of M&A of some kind. Yeah, exactly. It's like I'm trying to look at the positive for Elon. Like, how do you come out of this? There's only a few ways. He didn't find the trillions of dollars in fraud. No one's been arrested. That Senate hearing today was bullshit. They could have fucking eaten Bessant alive today, and they didn't. Like, Bessant is lucky for a few. I don't want to talk too much about this stuff, but like, Bessant is lucky that the Democrats are fucking lost. If they ever got their shit together, we would have some real, like, this market could go to zero, not zero, but fucking red bars to hell. So, and I'm only using that in relation to like Doge and Elon and getting involved in politics. I want Elon to be a CEO. That's what I want him to be. I don't want him to be in politics. I don't want him to, or give it up. Like a sabbatical would have worked for me too. Like, take the sabbatical, go do the politics shit. And it's a gambit. We talked about that before this even started. I was like, I don't know what the gambit is. There has to be some kind. What I assumed at the time was that Elon found out about whatever these financiers were talking about back in COVID, and knew this was going to happen in advance. And he figured. My thesis here is that Elon was like, my company is likely going to get sucked up into this tariff thing and implode and go bankrupt. So I have to place my bet with Trump and this whole economic change. And we're building factories in the U.S. We're going to go to war with China. And the only way my company survives is if I do these things, which would either be a bailout from the government or ingrain yourself in government contracts. Like, he probably had to measure the likelihood of positive for the company. But in that process, I think it would have been better for him to take the sabbatical or not go as far with it as he has. Those were big missteps that are a real problem to recover from. And, that's part of life. So that happens. Even with how great Elon is and stuff, when you make those mistakes, you're going to pay the piper for them one way or another. And he's lost Europe. America tends to get over things a little bit better than Europe. Most countries that I've been to, like stuff like that, you don't ever recover from. Yeah. So I don't know. That's a tough one with Elon. I try to like look at Elon from both sides, like, fuck Elon, and then how does he recover? And always trying to look for like what am I missing? I'd rather not be in the wrong side of that trade. I think Tesla can go higher and stuff, but Rivian in particular has a pretty squeaky clean reputation, and the people that work for them I know personally. Like I know like bigwigs in Rivian, and they are good. These are guys that the OG and engineers for Tesla, they went to work for Rivian. So as far as I know, behind the scenes, Rivian's a good fucking company. One way or another, they're gonna get bought out. They're gonna get rolled into another company, and I like them at $10 for $10. And just on an M&A hope, you hold it long enough, it's gonna fucking moon. I think that's worst case scenario for Rivian. I think their future is bright. Yeah, I like some of that. I meant to speak about that earlier today. Like there was like some that Bessant shit today. Some of there was so much like politics or bullshit, but some of it's real. Like Bessant was like this other. It's so fucked up because they're like shitting on Democrats. But there's some reality in what's being talked about. Like, what do you think about like child labor being used to build our products? Ain't that wrong? I'm like, well, shit, it wasn't fucking wrong for the last fucking, that shit wasn't wrong for the last 30 fucking years, was it? Now all of a sudden it's wrong? Like, nobody had a problem with that shit. Not a Republican, not a Democrat. And the real truth is that these guys all know, or they've all agreed that they're going to use robots, right? And it's not child labor. Nobody gives a fuck about child labor. You don't. You have a computer, right? You got a fucking iPhone, right? You don't fucking care about child labor. They got kids in mines all over Africa mining right now. Like, it's comical to even believe that anyone in this country believes in that shit. There's a few, but not the majority. So is that based in reality? No. It's based in the fact that, CEOs are like, hey man, we don't need to pay. We can, the chase for more profit involves not using any human labor. A robot can't speak back and can't take a vacation. And we're closer to that than finding another country with cheap labor. Does it make sense? Like, so spare me the fucking, spare me in that Bessant shit with like child labor, right? And, the horrible Democrats, the horrible Republicans, whoever it is you're blaming at the time. It's all bullshit. It's all semantics. The real reason is because of robots. That's the real reason. You don't need an IP, right? If you can use robots, you don't need China. And you can limit IP, right? Destruction, right? So you bring that manufacturing back to the U.S. or into a country where it's even cheaper. So like you do the robotics in Mexico or a South American, or we don't know about that shit yet, but like Central American, Caribbean nation, or the like. When you see like that USMCA shit, so the gist on USMCA is it started out as NAFTA. And the idea behind NAFTA and USMCA was our own Belt and Road Initiative. Now, you guys know I'm a Democrat and shit, right? But let's be honest. USMCA and NAFTA was a sweetheart deal between the U.S. favorable trade conditions between the U.S. and our preferred trading partners. In Mexico in particular, Colombia, and some other countries, but mostly Mexico is the biggest offender. Rather than develop manufacturing in Mexico, and we gave a blind eye to this too. What really happened was China came and they backed the manufacturing and assembly of goods in Mexico rather than in China. So what we need, or you and I need, is we need to break that relationship, right, with China. That's and the dual part about the Panama Canal is that we don't want China controlling those ports, even if they're doing new routes to deliver shit to Mexico. It's not about that. It's about breaking and stopping the manufacturing and assembly of Mexican or of Chinese goods, manufacturing and IP theft from Mexico, improving our relationship with Mexico, and saying, hey, we're going to put robot factories down in Mexico. You make a bunch of money. We're saving our IP from China. And we have this Panama Canal to defend Mexico, the United States, and the West, and to put our ships through there. And if anything, it's to deliver goods manufactured in the United States to what? Other markets through the Pacific, right? So today, listening to Bessant say that shit, whoever that other, I don't want to call him a name, but you know, the guy was like, please spare me the fucking, it's like, spare me the bullshit. We know what this is about. It's more about cheaper labor in robots. We found cheaper labor. We're closer than we think to that switch. I think NAFTA was a great deal. Well, the big giant sucking. It was a great. In hindsight, it's a great deal. I remember NAFTA, and I remember Ross Perot and big giant sucking sounds taking jobs out of the United States. You don't want those jobs. Those jobs are no longer available. History moves on and technology moves on. You're closer to IB or to an internet or to a UBI than you think. I'm going to tell you the truth. You're not a Luddite, or you can be a Luddite, but times change. We're going through a technological revolution. You can get stuck in the past picking fucking corn and fucking whatever you want in the fields, or you can get the machine to pick it for you. We are literally at the cusp of a technological revolution. We are at a similar point that we were in the 18 to 1900s, and you can sit there and say, well, they took my job fucking working in the fields. But the truth is, you got to learn how to run a tractor or, whatever it is, and learn how to like plow the fields with a piece of machine, if that's available. So we are not that country. We're a very wealthy country, one of the most wealthiest in the world. There aren't that many people to do those jobs. You, not you particularly, but you out there might be thinking, well, I'll take that job, but you are antidotal. Our people are, even our factory workers are well trained today. Even our factory worker is not comparable to a factory worker at the turn of the century. Even as a whole, even all of our people, and they don't want those jobs. So we're making the jump. That's real. You either have to get on board with it or you can deny it and be left in the past. And that's what it's going to be. They're going to have robots building our shit. They're going to use AI at some point to jump on board and start making decisions. That's the future. That reminds me a lot of like people from the 1800s. That ain't going to happen, right? I'm going to ride my horse while that car's riding down the road. There'll always be a need for horses. There is, but it's still niche. It's not on the road today. We're not riding horses down the fucking road. And the same thing applies here. So NAFTA at the time was correct, and I agree with you on that. NAFTA was a giant sucking sound of jobs, but it in the forethought has proved that even though it became USMCA and whatever it becomes again, that we do need cheap places to manufacture. We know that we want manufacturing where? We're not going to do it in Africa. We lost the Belt and Roads in Africa, right? We have IP theft, right? We're not known for manufacturing anymore. When they say bring manufacturing back to the United States, that ain't what you think it is. It ain't going to be like a factory down the road with a bunch of guys going down there with their lunch pails and they're, I don't know, fucking doing the stamp machine or something like that. That's not what they're talking about. And they're not there to help you either, nor me. They don't care about you and I. They don't give a flying fuck about bringing jobs back to the U.S. like you think they do. They don't care about like some guy going and like slamming the stamper. They care about their IP and their product, and they care about cheap manufacturing. And if you can get that back in the U.S. or Mexico or Canada, that's where it's at. These guys are chasing profit perpetually. They are greedy and evil. You need to understand that. That is what they are. They do not care about you and I. They never will. And so when they say, well, we're going to bring it back, we're going to bring it over here and whatever, all this other stuff, that has nothing to do with you and I. If we gain something off it, sure. If I can go to college and go work as a mechanic on robots, or I can go and learn how to code a robot or change a robot on the fly, or I can go and lube a robot or something like that, that's fine, but it's not the same. And it's only if they need me. The less they need me as a human, the more happier they are. It's a perpetual quest. It's never stopped in capitalism, where they don't care about you and I. They really don't. They didn't care about you and I in NAFTA. They don't care about us in USMCA. They're not going to care about us in the next iteration of it. It's perpetual. It's constant fuck you and fuck me. So even right now, to think that any of these guys care about you and I is an insane proposition. If you and I ever think that Wall Street financiers or CEOs or a politician cares about you and I, you got to share whatever the fuck it is you're smoking. Because none of these people, in my experience, ever in my life, have ever given a flying fuck about us. Zero. I've never been in a single fucking C-suite and had a CEO behind a closed door say, I care about my fucking employees. It's a diametric opposite of that. Always. They're evil, man. They really are. And we're the plebs. We think we're those people, or they like us, or they're our buddies and friends, but they're not. Get in your car. Go drive to fucking go get in your car. Go drive to like go up to like Montana. Go see what they say to you when you fucking go to the ski slope. They're gonna tell you to go fuck off. And they'll tell me to fuck off too. They don't think on the same plane that you and I do, man. You wouldn't be sitting here with me if you were worth $150 million or $5 billion. People live in a whole different world than us. Whole different. And like that, man, like NAFTA fucked us. Fuck no. Financiers, politicians, and CEOs fucked us. That's who fucked us. Oh, there he is. Exactly, Steve. Oh, I ain't talking to you. I'm talking to I have a chat here that you can't read. I have an entire community that you can't see on free stream. I'm talking to someone completely different. God damn. Like, who is he talking to right now? He ain't talking to me, is he? %, brother. Big giant second sound. Mm-hmm. Tem. I thought we already talked about Tem, didn't we, or no? I can see you. These people like, they think I care. I thought we looked at Tem. Yeah, we can.